board, its longest losing streak so far this year. The benchmark 10-year, that is down 1 basis point right now at 490. Remember, it was above 5% at the start of the session. Hess shares 0.9% higher. Steve told you about that deal a little earlier. Investors also preparing for another busy week of corporate earnings. They include some of the top tech names: Microsoft, Alphabet. They report tomorrow, Meta on Wednesday, and Amazon on Thursday. And the auto strike getting worse, expanding. UAW says 6,800 members at the Stellantis Sterling plant are now joining the strike. Car guy, help me out. Sterling plant, I don't know what they do there.
Ram trucks.
Oh. Yeah,
that is big.
Right.
That's their
big.
moneymaker.
6,800. So
including one of my favorites, the TRX.
Oh, who doesn't like the TRX?
I have
Supercharged
no idea what that is.
6.2 liter
6.2 liter
with over,
wow.
or just, I believe, 700 horsepower.
Yikes.
Yeah, those are the ones you see on YouTube doing those crazy.
Yes.
Oh, let me give a stock quote. S&P 500 now down just 1 point. The Dow, 21 points lower. The NASDAQ 100 has turned around. It's up 6 points right now. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Matt and Paul.
All right, John Tucker, thank you so much. We appreciate it. Bloomberg Markets today brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. All right, earlier today, we had the 10-year Treasury breaching 5%, first time since, what was it, 2007? And I only have one person to blame for that, but we're going to get to that in just a moment. But let's break down a little bit more, Matt, this strike that seems to be expanding in the auto industry. David Welch joins us from our Detroit bureau. David, was this expected? I mean, this is a pretty big expansion here.
It is. Look, it was just Friday afternoon when he said he wasn't expanding the strike because there was enough progress. He did still have complaints about each company not moving on certain issues, he being UAW President Sean Fain. And, then here we are Monday morning, and he's walking up not just any old plant, but the Ram plant. It's their biggest plant, their most profitable. It's, this is a big statement.
Is the problem that Stellantis just isn't doing enough to ensure future production? Because I know they're looking at some lines that are just going to run out at the end of this year, and they have nothing to put in that place.
Yeah, job security has been a big issue with Stellantis. They've got that plant in Belvidere, Illinois, makes small cars, small crossovers. They haven't guaranteed a new product there. There's an engine plant in southeastern Michigan that has been on the bubble. So you do have, and actually there were a bunch of other smaller parts distribution facilities that they wanted to consolidate. And also, look, Carlos Tavares, the CEO of Stellantis, is a pretty no-holds-barred kind of guy. He's also European. He doesn't have the hometown loyalty that Bill Ford or Mary Barra would have. Mary's from the Detroit area. Her father worked here. She would, they do make a lot of vehicles in Mexico, but she would think hard about closing plants and what it would do to the economy.
Farley too, right? His grandfather worked at a Ford plant, I believe.
Farley, and certainly Bill Ford does. Ford has more production here than anybody.
Yeah.
You're Carlos Tavares, and you're running this multinational French, Italian, American conglomerate. You're just looking to make money and build cars wherever it's most economical. So the union's going to want guarantees, and it's going to be a big fight.
Yeah, it's going to be a big fight. So, again, to the extent anybody was looking for some progress here, this does not appear to be it. Again, the UAW expanding their strike against, this time, Stellantis, but still against the big three across the board. David Welch, thanks for joining us. Short notice there. David Welch, Detroit Bureau Chief, on the latest on the auto workers' strike. Again, let's get back to those markets, because earlier today we had the 10-year Treasury hit 5%. And that kind of really got people's attention.
Push stocks into the red.
Push stocks into the red.
Now it's kind of turned around and stocks are back up.
Yeah.
I mean, unchanged is the way a lot of people would put it, but we're looking at a 6/100ths of 1% gain on the S&P.
I'd call that unched from back in the day on my earliest
session
highs screens. Liz McCormick joins us. She's a chief correspondent of macro markets with Bloomberg News. Liz, what do you make of the last, 2-3 weeks? What's happening in the bond market? Just seeing yields just March ever higher, and seeing, we haven't seen these types of rates since 2007-ish. It's pretty amazing.
Yeah, amazing. And like a credit to my colleague Yi Shi, who was crunching some numbers and said it's the fastest and the biggest trough to peak rise in 10-year yield since 81. So that's a long time. So the long end is getting beaten up, like you said. And
81, that's before Paul came to the street.
Yes.
Paul was just
a good year for
a young boy drinking near beer at Lawrenceville.
Exactly.
Yeah, 81 was fun, right? I like the 80s,
year.
so we won't go there. But yeah, I think the market and some of the Fed officials, I think, will be saying, what took you so long, or finally kind of digested that the Fed is like saying we're going to be higher for longer, that you guys pricing, which they still are by like mid next year, which again may be wrong, that the Fed was going to take a quick pivot to cutting. And now the Fed is saying like, hey, we're leaving a maybe on there for one more hike, and we're not looking to cut rates anytime soon. I mean, look at the economy. You guys are talking about this, all the time. Labor market's still pretty darn strong. Third quarter GDP, we have those numbers this week, but that was good. Should slow down, so they say, in the fourth quarter, but things have been holding in. And I think people got religion, like I said, that higher for longer. And let's talk about the thing that, I guess I've talked about for years and sometimes nobody cared, is that now we started in August. Citigroup folks say in November, the Treasury Department is going to kind of even up the ante on how much they're going to say they have to increase the amount of note and bonds they have to sell to fund our deficit. And at a time when the Fed's not helping, right? They're doing their so-called QT, getting out of the bond holding business. So I think all that's come together to kind of...
It's a perfect storm for higher rates. It's a perfect storm to raise the bond vigilantes from the dead.
I've been slapped by that. Don't use that word too much. You know what I mean?
You can't? Why?
Well, Matt says I can't use the word merger.
Does Yardeni have a copyright on that term? Every
No.
time we say bond vigilantes, Ed Yardeni gets paid.
Yeah, Ed Yardeni, we gotta love that guy. He's right. He's been saying, people are worried about fiscal side now, and it matters. And again, let's take the backdrop that inflation, which has come down a lot from the highs, is still way above 2%, right? So you've got sticky inflation in the background, and this fiscal side that's not getting any better, right? We did that nice story, Eric Wasson and I and a bunch of folks a while ago, looking at, what's normal is usually you have this uber fiscal spending when you have a slowdown. And now we've had growth and it hasn't let up, right? So, and now we need more spending, which we should, to help our, foreign nations
Oh, we
in
need
trouble.
more spending for everything,
Yes,
Liz. I mean, just name a topic. We need to spend more money for that reason.
We do.
Definitely heartfelt spending. Let me ask something that's outside your purview then. Let me go ahead and throw you a curveball that'll make you feel uncomfortable. No, are these higher yields and the volatility, the supply that we have to put online, is anything going to be able to fiscally discipline the government? Like, is it going to actually control spending? Because we still have, deficits of over 1.6 trillion and climbing.
Well, it's definitely not now. I mean, part of what's going on in the House is there's a sect that says they didn't want to fund the government. They wanted to shut down. We got around that, but they kicked out the Speaker of the House. So teeny bits are trying to say they care, but I think you're right, Matt. I don't see any zeitgeist in Washington that wants to cut spending. Let's not take sides, but one side wants to usually cut taxes and things like that.
Yeah, well, that side raised taxes on me recently. Don't forget the SALT deduction.
Exactly. I live in New Jersey too. Yes, I know your pain.
Okay, so the side that normally cuts taxes is the side that's draining money from my bank account.
It's all about you.
But it is all about you, isn't it?
Of course.
Yeah.
All politics is local.
But I just wonder if we're going to be able to get this under control, because right now is the worst time to be borrowing more money, and it's getting worse by the day.
Exactly. And I forget which talk it was, Chairman Powell, maybe it was the one last week, they asked about the fiscal side, which he always kind of says like, hey, that's not our purview. But I've been saying for a long time we're on an unsustainable fiscal path, trying to push, because the Fed doesn't want to and they're not supposed to alter their policy so the funding of the government, which interest costs are just shellacking us now, become a real problem. But there's some people waving a flag saying, kind of the Fed has to put this in their calculus a little, even unofficially, because Washington's doing nothing. I don't know. We have a presidential election.
They used to, Conrad. Greenspan used to make comments in front of Congress that were
Dicey, right? He
He was critical of government
Yeah.
spending at times, you know?
Yeah.
So,
All right. Torsten Slok out with a note saying 33 million small businesses in the U.S., and they are now paying 10% interest on short-term loans. So if you want to, and he says obviously the outcome is lower CapEx spending and lower hiring. So maybe the markets are doing some of the work for the Fed. Then maybe the Fed can just stay. I don't know.
Well, look at somebody on Bloomberg had a report about the rate on credit cards. Like, please, this is why we tell you to pay off your balances, because the highest rates are like 30%, record
That's
high.
usury.
Yep.
Yeah.
Yep. So my
Terrible.
My 19-year-old is getting a little taste of that. little economics 101.
28.93%.
Wow.
That's not bad.
God.
According to
I got to
Bank
school those capo kids. Don't put anything on a credit card.
Exactly. All right, Liz, thanks so much for joining us. Liz McCormick joins us, chief correspondent of macro markets with Bloomberg News. Right now, let's head down to Washington, D.C. We'll get rolled in national news with Amy Morris.
All right, thank you, Paul. UAW expanding the auto workers' strike, shutting down the Stellantis Ram truck plant, bringing those on strike now to 40,000. Turkey has sent the bill for Sweden's NATO membership to Turkey's parliament for a vote. Still not clear, though, when the final vote to ratify Sweden's NATO membership might be held. The House still doesn't have a speaker. Now the race is even more complicated. Bloomberg government Congress reporter Zach Cohen explains.
The field has really exploded over the weekend in the absence of a clear frontrunner. And given the fact that this will be 9 candidates in a secret ballot behind closed doors after repeated rounds makes it very unpredictable at this juncture.
Bloomberg government Zach Cohen says House Republicans are set to meet tonight to hold a candidate forum. The U.S. is bulking up its military presence in the Middle East. We talked with retired General Frank McKenzie.
I think our primary task is to ensure that Iran is deterred and does not enter the current problems that Israel's having with Gaza.
Retired General Frank McKenzie is the former U.S. Central Command commander and is the executive director of the Global and National Security Institute. War in the Middle East has the FBI tracking more potential threats of terrorism in the United States. FBI Director Christopher Wray tells CBS's 60 Minutes China may pose the most danger to the U.S.
We have seen efforts by the Chinese government, directly or indirectly, trying to steal intellectual property, trade secrets, personal data, all across the country. We're talking everything from Fortune 100 companies all to smaller startups. We're talking about agriculture, biotech, healthcare, robotics, aviation.
FBI Director Christopher Wray says they have about 2,000 active investigations just related to the Chinese government's efforts to steal information within the U.S. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg.
Connection lost.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. S&P 500 right now, a little changed after earlier dropping 1% in the first few minutes of trading, briefly touching the key 4,200 mark, which represents a 50% retracement of the rally off the lows seen in the banking turmoil back in March. Meantime, Larry Adam, Chief Investment Officer at Raymond James, he sees the economy headed for a reversal.
I think if you look at what's happening now, real time, this economy is starting to slow. And I think by the time we get into the first quarter of next year, I think we do have a mild recession unfolding, which will ultimately help take those yields that we've been talking about this morning lower.
Some relief from the benchmark 10-year Treasury now at 490, down 1 basis point. Remember earlier it was above 5%. And UAW union members at the Stellantis pickup truck plant in Sterling Heights, Michigan, walking off the job. This is going to hurt. They make the Ram 1500 pickup truck, the automaker's best-selling model. S&P 500 down 3, the Dow down 53, the NASDAQ 100 up 8 points. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Matt and Paul.
I don't know why you didn't have this, John. Cocoa futures surged to the highest level in 44 years in New York as companies brace for a supply shortage that's making chocolate more expensive. The most active futures contract rose as much as 2.3%. And as top growers on the Ivory Coast and Ghana are expected to have harvest poor crops. That's the highest price since January 1979.
We're cuckoo for cocoa.
Yeah, so go figure there. So we've got.
I can only hope that it prices me out of the market.
Exactly.
You know?
I mean, hot cocoa.
Then I won't have to buy the Wegovy.
That's right.
Do you know how that's fertilized, by the way?
Cocoa?
The beans?
No.
Pigs, like running around through the cocoa forest or whatever.
That sounds
carrying
delicious.
The pollen.
Yeah, that sounds
wild
great.
pigs.
I love pigs.
Big trade here Monday morning. We got a big trade in the energy space. You have
Huge,
Chevron,
right?
Buying out Hess. And for those of us in the Northeast, we're familiar with the Hess gas stations and the Hess toy trucks. Big part of growing up and big part of my kids under the Christmas tree as they were growing up to get the latest Hess truck. So a big trade. And we want to bring you a discussion in that energy space. Bloomberg's Alex Steele and Guy Johnson speak with the CEOs of Chevron and Hess after Chevron agreed to buy Hess in the latest oil mega deal. Let's head over to that discussion. We'll talk about
$53 billion.
$53 billion. And Alex and Guy are going to speak with the two CEOs. Let's head to that conversation right now.
We welcome now our Bloomberg TV audience and radio listeners. It is the second major oil deal in just the past few weeks, and this is a big one. Chevron announcing a $53 billion all-stock deal to buy Hess. And we're joined now by the two men behind it, Mike Wirth, Chevron chairman and CEO, and John Hess, Hess Corporation CEO. Gentlemen, thank you so much. What a pleasure. No joke, this is the only question I'm getting today. Will the toy trucks from Hess continue to be available at Christmas time?
Yeah, so not to hold you in suspense, yes, they will.
Okay.
In fact, next year is going to be the 60th anniversary of the Hess toy truck. We sell them on the internet, and we intend to continue selling them.
So I got to ask, I didn't know about these trucks beforehand. Was it part of the deal? Is there some line in the deal about the trucks? Was it part of the negotiation?
Let me put it this way. Mike and I came to a mutually agreeable understanding to continue selling the trucks.
That's a yes. That is an actual yes from two CEOs. So Mike, walk us through actually how this deal did come about. We heard earlier that you guys have been talking for a couple years, and I'm really curious as to why now is the right time to make this happen.
Well, we have been talking for a while. There's a terrific alignment between the two companies, our portfolios, the cultures of the company and the people, and particularly as Hess's development in Guyana has continued to be de-risked and progress, what was at one point in time kind of a wider gap in valuation has narrowed, and the stocks of the two companies have traded into a range where it works for both of us. And so now's the time that those circumstances have come together, but for quite some time we've seen the fit and the appeal and been working on this.
I'm just so curious, John, because on the call, it seemed like some analysts were intimating that, hey, did you get a high enough price?
Sure.
And also, you're doing things very well in Guyana, and I appreciate it's also the Bakken, et cetera, but if we just focus on Guyana, you guys are already crushing it. Like, why'd you need Chevron?
Yeah, well, it's a great question. I think some context would be important.
Okay.
Shareholder return in the industry, whether it's independent or whether it's major oil company. Last year, our stock went up 94%, number 2 on the S&P. So we've already created a lot of value. At the same time, now that the pricing got in a range that would work both for Chevron and work for Hess, we think we came up with a win-win. Hess brings Chevron growth in resource, growth in production, growth in cash flow. Chevron brings Hess financial strength in terms of a diversity of world-class assets, in terms of sterling balance sheet, and in terms of industry-leading cash returns. And when you put the two together, you create the premier oil and gas company positioned for the energy transition.
Mike, what I'm hearing here is that this is a great fit. Could you do this on your own? Could you build what Hess has built from the ground up? Is it easier to buy than build right now?
Well, look, this is about long-term growth and long-term value, which is what we're always seeking. Hess has a unique portfolio that actually strengthens our portfolio with some things we're always trying to do. We're always out exploring. We're looking for new finds. Guyana's the biggest discovery in more than a decade in this industry. It's just a unique and compelling asset. And so it would be difficult for us to do on our own. We continue to explore. We'll continue. Everybody in our industry is looking for these things. But this was a great opportunity for us to join a partnership that's done a terrific job in developing this asset. But also the other assets in the Hess portfolio are ones that will be additive for us as well. The Bakken, the Deepwater Gulf of Mexico, Southeast Asia. And so it's a very nice fit at a portfolio level, nice fit at a culture level, and we're going to create more value for shareholders.
Yeah, so let's get to the Bakken part too. So how important is the Bakken going to be in your portfolio? Because clearly the rhetoric after this deal was it's all about Guyana, right? Like it's deep water, it's amazing, the costs are so low, it's going to be awesome. Well, where's the Bakken in this?
Well, the Bakken's very important. We've got a big shale business already, right? With positions in the Permian, the DJ Basin, we're the largest producer now. Hess has been doing a great job in the Bakken for a long time. That's really where this all began. And so for us, it's about adding another scaled position in shale that is performing very well. We can bring whatever expertise we may have. We're working on technologies to improve recovery and learn from our new colleagues at Hess who are doing things in a basin. When we went into the DJ, we learned some things that we hadn't been doing in the Permian that made us better. I'm certain the same thing will happen here. So it's absolutely an important part of the transaction.
John, you talked about the price narrowing. You started off far apart, bid-ask kind of widespread, and came in. What brought it in? What factors allowed you to bring that understanding between the two firms together?
Well, the gap in shareholders recognizing our value, we weren't getting credit for this 11 billion barrels of oil equivalent resource that we had in Guyana.
So the market narrowed the gap for you?
Yes. Exactly. And then it got to the point where it got to the win zone for Mike and the win zone for us. And, you also got to remember, this is a stock for stock deal. So some people would say, well, geez, you're selling it. And we're not selling for cash. We're staying invested. Our family is going to be a long-term shareholder of Chevron. And we're happy about it. And we think there's going to be a lot of upside to come, in addition to which our own dividend is going to go from $1.75 a share to $6 a share. And next year, it's $6.50 a share. So you're getting the benefit of growth in asset value with growth in cash returns. And that's a magic formula. And I think it'll be the best oil company to own and actually the best oil company to work for.
I have to say, you guys seem to get along quite well. You don't always see that with the oil mergers. How did you guys first start this conversation, like years ago? What was that? Was it like you guys at a CERAWeek dinner, like chatting? What was it like?
It was actually at a dinner, but it wasn't at CERAWeek. It was at another location. But look, John and I have been friends. We've been great admirers of Hess. I've been a great admirer of John for many, many years. And it was a very natural evolution, I think, as we're both looking to improve our businesses and create value for our shareholders. We had a nice conversation. As John said, in the beginning, the market wasn't recognizing the potential in the Guyana asset in particular. As that's been de-risked and as we get closer and closer to this cash flow inflection, we really did move into this zone. But it's been a very friendly discussion along the way.
Seems like it.
And by the way, you haven't mentioned yet, but we look forward to John joining Chevron's board of directors and continuing to exert influence over the strategy of our company. And he's got key relationships with partners and governments around the world that we'll continue to benefit from.
So, and also, if I can, Mike and I have known each other through the industry for years. I have a lot of respect for him. I think he's the best CEO in the energy industry, one of the best in the United States. So have a lot of respect for him. So
it wasn't succession things for Hess. It was not a succession.
No, we were actually prepared to continue as an independent. That's what our history is. We're celebrating our 90th anniversary as a company this year. We have the best hand in the business, the best growth portfolio in the business, and we're just executing the strategy to go forward. But, Chevron brings forward that diverse portfolio of assets, strong balance sheet, as well as high cash returns. And when you put those strengths together with our growth strengths, you really create, I'd say, the premier energy company that's out there.
Mike, there aren't many assets like Hess out there, but there are a lot of assets out there. And I hate to sort of ask this question on a day when you're doing a massive deal, but are you done yet? Is this an industry that is going to continue to consolidate? We've just seen two really big deals in as many weeks. That can't be by accident.
Well, I can only speak to our deal, and this is the right deal for us. We actually did another deal earlier this year. So for us, integrating is very important when you do a transaction. You actually, to create value, you need to bring the companies together, the people. You need to continue to operate safely and deliver to your customers. And so our focus for the next several months, if not longer, is really about execution and executing well. In the long of time, our industry has grown through organic and inorganic activity over time. Our company has done the same, and I do think, in the future there potentially could be other things, but that's not here and now. That's further down the road for sure.
Do you guys think that oil's going to stay volatile and trade above 100, 150? I'm going to go to John because I feel like maybe you can talk more about what you really think the oil price is going to be now.
Look, in the short term, there's a direct correlation between world oil inventories and price. World inventories are drawing at about 1 million barrels a day this quarter. As you get to next year, we think demand's going to grow maybe 1.5 million barrels a day, barring a worldwide recession. Hopefully we don't get there. I know there are all kinds of geopolitical events, be it in the Ukraine or be it in the Levant, that are going on right now, tragic events. But taking that factor out, we think the market's going to be tight, and the supply side of the equation is going to have to run fast to keep up with the demand side. Shale's no longer the swing producer. Saudi Arabia and OPEC are. They're going to keep the market stabilized. But I think the real issue for the world to understand is that oil and gas are needed for decades. They're key to an affordable, just, and secure energy transition. I think the conflict in Ukraine put a shining light on energy security. And at the end of the day, oil and gas are a strategic industry for our country in terms of jobs, 12 million jobs, more than automotive, direct and indirect. In terms of electricity costs, 2 to 3 times less than they are in Europe and most of Asia, and ultimately national security. We're energy independent. Europe buys 70% of their oil. China buys 70% of their oil. So we have a real strength. We should be leaning into it for economic prosperity, but also national security.
Mike, isn't that the real message from this deal? You could have done a deal in the energy transition space. You didn't. You did this deal. Isn't the message coming from this that the industry is now at a point where it is going to invest in the future, that the energy transition story is of interest, but it's not the only area of interest, that this is an industry that the world still needs to rely on? You could have done other deals. You did this one. Isn't that the message that comes from this?
Well, I'd put it a little differently, Guy. We have done other deals. Earlier this quarter, we closed on the largest green hydrogen manufacturing and storage facility that will be built in the United States. We're the second largest renewable fuels producer in the U.S., and we're expanding our production capacity there. So we are doing the other deals. But I think the point that John's making is really important. We need to continue to invest in the energy system that supplies the world today, even as we're investing in one that can integrate into that and help reduce the carbon intensity tomorrow. We believe the future of energy is lower carbon. We believe these new technologies will play a greater role, and we continue to invest. So I don't think you should read this as a lack of commitment to the energy transition, but we need to invest in what the world runs on today. This makes us a stronger producer. It takes 2 great American companies and brings them together, which is good for national security and economic security. And we're committed, both of our companies are committed to a lower carbon energy system.
Mike, speaking of, are you able to pump more in Venezuela right now? And will you be investing more in Venezuela because of some sanction relief?
So we have seen production in our ventures in Venezuela increase this year from around 50,000 barrels a day when the year began to something between 100 and 150 today, and we've been gradually seeing that come up. We've recently seen some further actions by the U.S. to reduce some of the sanctions on Venezuela. This is a slow moving story.
Is it sustainable though? Like if you increase to 150, can you hold it there?
I think we can, as long as we can operate the way we're operating today, and some of these constraints have been taken off of us. And but the Venezuelan industry has been under pressure for a variety of reasons for the last couple of decades, and turning that around will take time and it will take investment. So I wouldn't expect this to be something that goes up dramatically, but yes, we've seen some steady improvement, and we're looking to try to continue that.
Gentlemen, thank you so much. We could talk forever, but we'll let you guys go. It's been a very long day. Mike Wirth, Chevron Chairman and CEO, and John Hess, Hess Corporation CEO. Congrats on the merger, guys.
Thank you. All right, there you go. Bloomberg's Alex Steele and Guy Johnson sitting down with the CEOs of Chevron, Mike Wirth, and Hess. John Hess announcing that acquisition today, as you would.
Yeah, I was going to say, I thought the interview was perfect until the word merger at the end, because a merger this is not, right? Chevron is buying Hess very clearly.
Let's break it down here. I want to go through some of the numbers, and we can do that with Fernando Valle. He's the senior energy analyst for Bloomberg Intelligence. Fernando, let me just start with the numbers. Being a former banker and analyst, the premium or lack thereof for Hess, it kind of surprised me a little bit, and I think some of the notes I've been reading on the street, some other folks. Talk to us about the premium. Talk to us about the valuation that Chevron's paying here.
Yeah, absolutely. I think part of that is, as John Hess pointed out on the interview, Hess has been the best performing stock in the oil and gas space, up 94% over the past year. When you look at the total enterprise value, it's fairly similar to the enterprise value for Pioneer Natural Resources that Exxon's paying. But the big difference is Pioneer generates about 4 times the free cash flow that Hess generates. And there are a few reasons for that. The first one is that the CapEx for deep water tends to be a little bit more lumpy. And then most of Hess's growth is over the next 3 years, in Guyana, they're putting 3 new production units over the next 3 years, which will then lead Hess to have that free cash flow profile that's on match with Pioneer.
It's a pretty big deal, and we've had a ton of deals in this. Well, we've had a few big deals in this space over the past few weeks. Do you expect continued consolidation in the hydrocarbons?
Absolutely. We talked with Exxon and Pioneer that would kick off the era of big mergers, similar to what we saw in the late 90s, early 2000s, and we still believe that's going to be the move from here. We have companies like ConocoPhillips and Occidental Petroleum that have large balance sheets that can make further acquisitions. They both were acquisitive in the past 3 years. And a lot of the medium and smaller players are looking around and saying, we need a dance partner with a much stronger balance sheet. Again, John has mentioned, it's not that we don't have the growth, we don't have the scale and the diversification that Chevron brings us.
All right, Fernando, I have to admit, my geography, it just was a little challenge there. So I had to go to Google Maps and find out where Guyana is on the eastern part of South America. So they actually have oil? When did that happen?
Well, so Guyana's borders Venezuela, and so it's actually, there's a little bit of a border dispute, but not near Exxon's and Hess's field.
Guyana's big for rocket launches, French Guiana.
Yeah, I was down there, for that.
So the discovery was in 2016, I believe, or 2015, the first one, Liza, and it's been developed by Exxon at a very breakneck speed. And it's the second largest contributor to non-OPEC growth after the third rather, after the U.S., Brazil. Guyana's the next one.
John Hess was saying that the price of oil is completely dependent on global stock. So how much we have, and everyone's been watching those stocks very closely. What do you expect for the oil price?
Well, I agree. And so the battle is whether we're getting more demand or more supply. And of course, OPEC's trying to pull some of that supply away. We think they are very limited to how much more they can pull. Our question remains on the demand side. And the numbers that we're seeing so far are a little mixed, but towards more on the bearish side. So we continue to expect that the next 6 months are bearish for crude. But then in the longer term, we think there is a lack of supply because we'll have to reinvest, and we haven't really done exploration outside of Guyana and Brazil for the past 10 years.
All right, Fernando, thank you so much. We appreciate that. Fernando Valle, he covers the global energy space for Bloomberg Intelligence, getting his quick thoughts on this big deal on a pretty decent merger Monday. Chevron stepping into the business in a bigger way, doubling down, tripling down, if you will, buying the Hess, the energy company there. All right, right now, let's kick things off, reset here, and get a Bloomberg Business Flash with Mr. John Tucker.
All right, we have actually turned mixed. S&P 500 has been swinging between gains and losses after briefly touching its key 4,200 mark earlier this morning. Communication services, right now, that's the best performing industry group in the S&P 500, and that's where you're going to find shares of Meta and Alphabet. Alphabet reports earnings tomorrow. Meta, they're going to be out Wednesday, opening their books. Treasury 10-year yields dropping after touching 5% earlier today for the first time since 2007. Now, as for those multi-year highs, Carl Weinberg at High Frequency Economics says, you know what, we can afford higher rates.
We're only 3 percentage points above the inflation target. We're only a percentage point or so above current inflation. All right, this is not punitively restrictive economic policy. We don't have to be afraid of real interest rates at this level. We have to adapt to them both in financial markets and in the real economy.
And Hess shares, they have erased the earlier gains, now bouncing between gains and losses. Other deal news, Roche Holdings going to pay $7.1 billion to acquire Televant Holdings. They're owned by Rovian Sciences. I have no idea why Rovian Sciences shares are lower. S&P 500 right now up 1 point, 42.25. The Dow down 27 points. The NASDAQ 100 is 40 points higher. I'm surprised at you. You don't remember Papillon with Steve McQueen?
Yes.
French Guiana prison,
Yes,
Devil's
exactly.
Island.
Yes.
I think this is a case of Paul pretending not to know where Guyana is, just for the theater of radio.
Well, I knew French Guiana because I actually, back in the 90s, I went down there for some satellite
You've actually
launches.
been there.
For satellite launches.
Remember, this is like the opening. Welcome to the penal colony, French Guiana.
That was harsh.
That was a harsh movie.
All right, John Tucker, thank you so much. We appreciate that. Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Brokers studio. And you can stream Bloomberg Markets on YouTube. So head to youtube.com, search Bloomberg Radio. Again, kind of mixed story out there in the equity markets, reversing some earlier declines. Let's check on Jess Metton. She is our equities reporter for Bloomberg News. She joins us live here in our Bloomberg Interactive Brokers studio. Jess, what are you looking at?
Well, JT got into this a little bit earlier when he was talking about, but looking under the hood for the S&P 500, you do have communication services up about 0.5%. So this will be the sector where we're going to get a lot of earnings news later this week. Obviously, that's the sector that does house when we're talking about companies like Meta, Alphabet as well. Also Netflix in that particular sector. But then on the other end of that, we've been talking so much, I know, about energy this morning, especially when it comes to Chevron and Hess in this deal. So looking at the energy sector, down more than 1%. So the S&P 500 briefly this morning fell below 4,200. Now it's trading around 42.26. Its 200-day moving average is actually around 42.35. So a little under 10 points below that right now, but edging just slightly higher. It's interesting because Elena Popina on our U.S. equities team has done a couple really good columns about the winning streak on Mondays for the S&P 500. So I believe it's something like 15 consecutive Mondays that the S&P 500 has been higher. But if you do think back to, say, Labor Day, obviously Monday was a holiday, but that Tuesday the market was lower. But definitely been a winning streak as investors have come into particular weeks, especially over the summertime. So it'll be interesting to see how the S&P 500 obviously ends up trading once we get closer to the bell. But this is a big week when it comes to earnings. So there's roughly about 40% of the market cap for the S&P 500 that will be reporting results this week. And so obviously, like I mentioned, you are going to have the bellwether sort of tech and growth names that we're talking about when it comes to Alphabet, Microsoft, Texas Instruments also along with that. But then also we'll have key industrial companies too. So we'll have 3M and GE on Tuesday. Boeing's also on Wednesday. And then of course, I know Matt's excited for some of these more automaker names like GM reporting Tuesday, Ford on Thursday. So those are some key components there that people are definitely looking ahead to this week.
I want to hear, like when the auto companies report, I want to hear about this strike.
Right, that's the big thing.
The strike expanded today, now for Stellantis in the plant that makes their Ram trucks, which are the money makers for them. So this is, I have to admit, not knowing about these things too well, this is going on a lot longer than I initially thought it would.
Right, and definitely trying to get a gauge of when you are looking at this, how the economic impact of the United Auto Workers strikes does have on that, and especially when you're looking at ahead to the guidance. It was interesting because I actually was crunching some numbers from Bloomberg Intelligence as far as what the stock reactions typically have been in excess of the S&P 500 so far this earnings season over the past couple of weeks, and actually companies that are beating on sales in both EPS are not getting rewarded as much, whereas on the opposite side, if you are a company and you're missing on both of those metrics, you're getting punished a lot more. So it's well under the 6-year average as far as how companies are being rewarded. It's basically, it just turned through Friday's data, it was actually pretty much flat, whereas if you were missing on both of those metrics, stocks in excess of the S&P 500 were underperforming by more than 3%.
So that means, I guess, investors are looking for an excuse to take some money off the table.
Exactly. And also we've talked a lot about how the earnings revision momentum was the most optimistic it had been since early 2022 coming into this earnings season. Typically you see the opposite happen where if you're looking at those 12-month out kind of forecasts for Wall Street analysts and consensus, usually they tend to mark them a little bit lower coming into earnings season, but a lot of them had to catch up because those expectations were just a lot lower and things were coming in better than expected the past couple of quarters. So the bar maybe was particularly particularly a little bit higher than the past couple of quarters, and so now, but also we still, the majority of the market cap for the S&P 500 just hasn't reported just yet. So when you do have a week like this with 40% of the market cap reporting, and then of course next week you will have Apple, Eli Lilly, and McDonald's, so there's going to be more than 20% of the market cap reporting next week. These 2 weeks are going to be pretty crucial to see potentially what this could mean, but so far it hasn't been as much of earnings driving the particular stock moves. It's actually been more of the macro this month.
Yeah, absolutely. I mean, talk about macro. And we'll ask this to RJ Gallo when we chat with him. But Bill Ackman says he's covered his bond short amid mounting global risk there. So that's interesting. I'm not sure how much I
So maybe he thinks it's going to turn around. How much do rising yields affect? Because I would expect, Jess, to see on a day when yields are rising, stocks coming down, right? Because the competition for returns. But we haven't really seen that, at least during the day when I'm watching.
No, and so many people want to talk about the correlation between stocks and bonds. And we've talked a lot about this being at sort of the most closely tied in about 25 years. BI has a lot of data on this, but we've also seen a number of sessions here recently where the correlation there has been broken. So it's sort of actually Gina Martin Adams at BI, she actually put out a note and she was looking at how if you're looking at the Taylor rule, which I know that a lot of people will follow, but then some people will kind of argue about what that really means. But
the traditional, like the typical knowledge is that when you're buying bonds, you're selling stocks, right? Or you're selling bonds, you're buying stocks. What I'm saying is right now, I would expect to see when you're selling bonds, you're selling stocks because price down, yield up, right? And that's the headwind to the S&P.
Right, and especially because of what we've seen with when you have the majority and when people kept arguing about narrow concentration all year, when you have those Magnificent Seven stocks being typically those longer duration stocks, you have more pressure on there. But you have seen the correlation break down at certain points. And so Gina actually had pointed to how the Taylor rule is kind of approaching this critical moment where it might be signaling that the Fed is finally normalizing rates, but obviously we'll have to see exactly how that plays out, but that's something that she was noting today.
Do you have a specific Taylor rule set up? Because I'm always wondering, Paul, if you type TAYL go on the terminal, you can have your own Taylor rule model, which I've been playing with for 20 years. I love this function.
And also, Anna Wong has her own version for Bloomberg Economics, which is a little bit about this, but they look at R-star and U-star and all those things.
What is what's the command for that?
So she has, I mean, usually I just go to her page and look at what she has on hers, but I'll have to ask her if she has a specific one built out in the terminal. But usually, like when I'm looking at for what Gina uses, it's what you were talking about.
Yeah, but the thing is, there's so many variables.
There are.
You've got to put in your own real rate. What do you put in for R-star? You got to put in your own NARU. What do you use for unemployment? Anyhow, I would love to see. I always like to see people's setups.
Right.
You know.
Actually, what Gina
I'm
was
going to ask Gina Martin Adams.
Yeah, so what she was arguing is like the consensus for core PC. We're going to have another update on that at the end of this week, but they're expecting it to slow to about 2.6% by the end of 2024.
Coming up this Saturday, South Carolina at Texas A&M. I think we need a segment of Amy Morris on air with Jess Menton. They can duke it out. So we'll see that in College Station, South Carolina at Texas A&M. Jess Menton, thanks so much for joining us. She covers all the equities for us. Let's go to our next guest, RJ Gallo. RJ Gallo, he's at that Federated Hermes thing. I first met the Federated folks out in Pittsburgh. That's kind of where they hang out, but they're all over the place these days. Hey, RJ, we see Bill Ackman here. Says he's covered his bond short amid mounting global risk. Did you notice that? And kind of what's that? Do you have any comment there?
Well, Bill Ackman gets a lot of attention in the market, and more attention than RJ Gallo at Federated Hermes, and that makes sense. But I would note that we at Federated Hermes have been leaning long, and we've been wrong. The bond market sell-off has taken on sort of a life of its own. It's knocking down all kinds of financial assets. Stocks are looking at bonds an awful lot these days. I can't say I'm surprised at Bill Ackman's comment. I mean, it's one sentence, so it's very, very, very brief, but it tells you what he's thinking. I do think the geopolitical situation has deteriorated sharply for obvious reasons, and the prospect of a wider conflict, bringing in many different parties, is, typically when things like this happen, it should be friendly to Treasury prices. So far, we've only had brief moments of that, and there could be more to come. It's hard to be short Treasuries when there's so much geopolitical risk and so many potential directions this could go.
But it's hard to be long, especially duration, when little swings in yield can mean a huge swing in the price, and we're seeing big swings in yields, right? So how do you deal with that?
It's a great point. I mean, now first of all, remember just some bond math. The fact that yields have risen has taken the duration on the U.S. Treasury index to 572. Back in May, it was 639. These are positively convex instruments, right? So the fact of the matter is that the duration, passive duration of the index has gotten shorter because yields have gone higher. That doesn't necessarily insulate you from price loss, but you're losing at a lesser and lesser velocity as a result. So, but we're not focusing as much on that as much as we are the fundamentals that we think are apt to erode. The economy has been red hot. It is obviously clear. Employment strong. There's very few signs of the consumer fading just yet. We think it's a matter of time that the diminishment of COVID era excess savings, pressure on small businesses, much higher borrowing costs all over the economy. The rules of economics have not been revoked. The time frame and the lags are difficult this time, but we still think will manifest itself in a slower economy, and we'll get some relief from these current bond yields, and yields should retrace somewhat lower over the next 3 to 6 months. So we're still leaning a little.
Got to be slower than 5%, which is what we're hearing in terms of third quarter guesstimates, and even for Q4 some forecasts. My question on the consumer is, clearly the consumer is going to spend down savings, and clearly the consumer is putting more on credit cards, and we're seeing delinquencies pop up. But is that more than it usually is, or are we just getting back to pre-COVID levels?
No, it's a great question. And we recently had a webcast with some colleagues, Phil Orlando and Linda Dissel, who talk to you guys sometimes, both TV and radio. And we were trying to sort of back up and look at the whole picture for the consumer, because the bottom line is, even though there are negatives, some of which we just touched on, the unemployment rate is low. Real personal incomes relative to the now lower level of inflation, albeit still north of 2, but lower than it was. Real personal incomes have gone up. When you think about the benefits to savers from having very safe liquid assets like money market funds, of which we manage plenty of them here at Federated Hermes, people in the higher income brackets who have plenty of savings and aren't pulling it all down to spend are benefiting from low risk, real returns. So there are tailwinds to the consumer. We are not calling for a collapsing consumer. That's not the case at all. I think what we're going to see is that the median household, maybe even up to the top 20% of households, everybody but the top 20% is probably going to fade. Enough so that the economic momentum coming out of what will be a very strong print for Q3 GDP is going to slow down, that the economy is not about to tank, but it's going to slow. And that's going to be good news for the Fed in their broader effort to still get inflation going down. Then you throw in the geopolitical risk, the sentiment destroying challenges that occur from wars happening across different parts of the world. We think that the economy is going to slow. The net impact on the consumer is a negative enough, not for them to collapse, but to fade from what has been a breakneck pace of spending.
Hey, RJ, when I look at the Bloomberg Index browser, INGO, for those sitting in front of a terminal, I see the only place in the U.S. fixed income that's in the green this year is U.S. corporate high yield, up 3.9%. Do I stay with that trade? Do I add to it? Or do I say, boy, maybe I should redeploy out of high yield here?
Yeah, I have a whole screen on my Launchpad here that I've built, and it's just a sea of red. And the greens that show up are few and far between. Leveraged loans are another space that actually has some positives. In both of those cases, leveraged loans and U.S. high yield, to your question, that's a credit-intensive asset, not a duration-intensive one. So it makes sense that with the economy surprising to the upside, surprising everyone, including Chairman Powell. He said it last week. Everyone's been surprised by the economy's performance in this calendar year. It's been great for higher credit risk assets. It's been terrible for duration, low credit risk assets that are interest rate sensitive. We think that should start to flip the script. We are underweight high yield. We are underweight loans. We believe that the slowing economy, small business bankruptcies are on the rise. the cumulative impact of the tightening of monetary conditions to include what are likely collapsing commercial real estate values and office space, all of these factors are going to catch up, and they're going to reward higher quality bonds over lower quality bonds. So we're underweight high yield and underweight leverage loans at this point. That has not been the right call up to this point.
Right.
But we're looking forward
to that turning around. Hey, RJ, for better or worse, my co-host is a native of the great state of Ohio, so of course I have to ask you.
Oh no!
How real?
Look at his mug, dude. Look at his mug.
Oh, I see
Look at the mug here.
Boy, your Michigan Wolverines look like the team to beat this year. Tell us about it.
Oh, that was a beatdown of Michigan State. I mean, I almost felt bad for the green and white.
So you guys, I mean, this is going to be it. I mean, this looks like maybe the best Michigan team in a long time.
Oh yeah, no, it's very exciting to watch. Very talented team. I watch football a lot, but I don't know if you want me to expound any further than that.
No, we'll leave it at that because you're going to come in to happy.
I'll tell you what. I love it when Michigan has a strong team, and I'm sure they love it when Ohio State is a big competitor. Like that's what makes it fun when you don't know who's going to win the game. When the boys really have to give it their all.
Right. So we're looking forward to that game at the end of the year. Michigan,
it's in Ann Arbor,
Ohio State,
I think.
In Ann Arbor. Okay.
Yeah.
All right. Very good. RJ Gallego, Federated Hermes. Let's get some company news with Steve Rappaport.
Paul, Chevron says it will buy Hess in an all-stock deal worth $53 billion. The acquisition gives Chevron 30% ownership of more than 11 billion barrels worth of recoverable energy resources in Guyana. Energy Aspects co-founder and head of research, Amrita Sen, explains what makes Guyana such a lucrative energy market.
Guyana is actually going to be the most prolific non-OPEC supply growth in the coming years. Guyana's production has been growing by 200,000 to 300,000 barrels per day. It's got several new FPSOs planned in the coming years. We're talking about production breaching 1 million barrels per day and continuing to grow.
That was Amrita Sen, co-founder and head of research at Energy Aspects. Chevron stock is down more than 2%. Hess shares are little changed. A jury orders Google to pay a female executive more than $1 million in a gender discrimination lawsuit. Bloomberg's Jeff Bellinger reports.
Steve Ulku-Rowe claimed Google discriminated against her by hiring her at a lower level, paying her less than male co-workers with similar duties, and denying her a promotion for which she was qualified. The tech giant disputed Rowe's account, arguing the director of engineering at Google Cloud had the same opportunities and was subjected to the same performance criteria as her male counterparts.
Thanks, Jeff. Shares of Google parent Alphabet are up more than 0.5%. And workers at a General Motors plants in Brazil approved a proposal for an indefinite strike to protest layoffs. GM reports quarterly earnings tomorrow. Those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
Connection lost.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. Green on the screen right now after coming off its worst week in a month. The S&P 500, right now it's higher, not much, 10 points. Investors starting to look ahead to some of the big tech earnings. You have 6 of the 11 major industry groups in the S&P 500. They are higher right now. And the best performing group, that belongs to communication services. So that's where you're going to find Meta Platforms as well as Alphabet reporting this week. Earlier today, the yield on the benchmark 10-year Treasury briefly topping 5.02% to touch its highest level since 2007. That has since fallen back. Right now, the benchmark 10-year yield 4 basis points lower, 4.87. The S&P 500 overall, again, up. Right now it's up 14 points, 42.37 on the index. The Dow Jones Industrial Average up 42 points, and the NASDAQ 100 right now is up 79 points. As far as crude oil, NYMEX crude, that is down 91 cents a barrel at 87.17. You're talking about the Michigan game.
Yes.
This comes under the heading of not business news, but like, what the heck were they thinking? So at Spartan Stadium, before the game starts, they're doing trivia.
Yep.
One of the trivia questions presumably had to do something with World War II, and they flash up, in conjunction with this question on the big board, a picture of Hitler.
Yeah.
Like, what are they thinking?
I don't know what context they would think.
Suffice to say, the folks in Michigan are not going to use that trivia vendor for their games anymore.
Michigan State. All right, John Tucker, thank you so much. We appreciate that. Matt Miller, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube. So head over to youtube.com and search Bloomberg Radio. We want to get some context, some historical context, some religious context to kind of what we're witnessing now in the Middle East between Israel and Hamas in Gaza and other parts of that region. We welcome Elizabeth Hurd. She's a professor of political science at Northwestern University. Professor, thanks so much for joining us here. I mean, a lot of us, I'm going to say, not just here in the U.S., but around the world, I don't think we have a full appreciation of the stark differences between Israel and the Palestinians that manifests itself with all this attention we've seen over the decades. Where's the starting point for us to try to get an understanding there?
Thanks for having me. Good morning to all your listeners and viewers. Listen, it's a really good question, and I think it's not one that's very easy to answer because there are many different starting points. One of the most common starting points would be to simply begin with Zionism, with the founding of the idea that the Jewish people in Europe, this was a European movement, should have their own homeland, and that homeland would ensure their safety in the face of persecution and violence by Europeans in the 19th century. So this goes back to the 19th century. We can fast forward to the end of World War II. We know about the horrors of the Holocaust. Jewish people were in desperate search of a homeland. And the British, who were controlling the region that we now know of as Israel-Palestine, declared through the Balfour Declaration that the Jewish homeland would have the support and sanction of the British imperial power. And it wasn't long before Israel declared independence as a state on mid-May, 14th of May, 1948. And since then, it has been slowly but surely expressing its authority and control and sovereignty over what we now know as Israel and Palestine. These lands are contested and have been contested since the first Jews started arriving.
So, a lot of people think, and I have thought in the past, that the Israelis came in there and took over Palestine. Like there was a country there called Palestine, and that was moved into by Israel. But actually, that's not the case, right? What was there before the Israelis went in?
So we did not have the sovereign state system, and this was kind of the days of empire. And so we had originally, it was an Ottoman province. What we now know as Palestine was an Ottoman province, which is like a state in the Ottoman Empire. That state, when the Ottoman Empire fell after World War I, it was basically disassembled. It ceased to exist. A rump state came into being, that was Turkey. That is what the inheritor of the Ottoman Empire. And the British colonial authorities took over what was then called Mandatory Palestine, which was an area that was under the authority of the British colonial powers. And Mandatory Palestine was then ruled by the British until after the Second World War, when they gave up authority over the territory, and Israel declared independence with the express support of the British authorities in the Balfour Declaration. That's the quick history. So no country named Palestine, but there was Palestine.
Well, and there were Palestinian people. Are they Jordanian?
They're actually Palestinian people. Many of the Palestinian people, after Israel was founded, the state of Israel in 1948, were forced from their homes, and they had to leave their historic villages and towns and communities. And many of them did go to Jordan, and many went to other surrounding countries and became refugees. And many of them are still living in refugee camps in the surrounding countries today. They are Palestinian Jordanians, but they are not just Jordanians. So these countries are inventions of Western colonial powers, and the lines that were drawn to divide them one from another are relatively recent. But the peoples have been there for a very long time.
Professor, I don't even know if there's an answer here, but if I were to, is there an independent consensus about who should get the land? I mean, independently, if you just look at the, I don't know, is there any consensus?
No.
Who's right?
And that's why, no, there is no consensus. And that's why we're seeing so much violence today. The only way we're going to reach an end to this horrific violence, which is taking innocent lives, I think we can all agree and we can all condemn and settle around the consensus that innocent lives should not be taken. Civilians should not be killed. Children should not be murdered. That's the consensus. How do we get there? We have to share the land. I think that now that's where there is no consensus. Who does the land belong to? Who has the right to govern it? Who has the legitimate authority over its people to define it, write its laws and write its constitutions and name the state? That's what's contested. And no, there is no consensus, but there are two peoples and there is one land. So this violence is going to continue until there's some kind of resolution that's reached.
How much of this is based in religion? I mean, it seems like if you pull those beliefs out that some magical being gave you or this person or that person a piece of land, we wouldn't have these wars.
That's a good question. I wish it were the case that we're just a matter of belief, but the attachments and the stakes and the ramifications of this conflict run much farther and wider than just belief. They are about control of the economies, control of water, control of access to ports, control of historical sites that have religious but also political and social connotations that run back centuries. So we can't really disentangle the religious aspect. For sure, it heightens the tension, but it's really not the only factor at play.
Do we know to what extent the Palestinian people, wherever they are, the West Bank, Gaza, to what extent do they support Hamas? Because it seems like you could get these two peoples together and say, you get your land, we're going to split this land up, and it's nobody's going to be really happy, but this is the way it's going to be, and it's the best for everybody. But then Hamas comes in and really makes it difficult. So what's the level of support for Hamas and Hezbollah amongst some of the Palestinians?
The level of support for Hamas and Hezbollah has been increasing as a result of the fact that Israel has continued to build and support settlements in the West Bank. So in other words, your idea of giving each side some land and calling it a day is a great idea. And that was tried in the 1990s. It was called the Oslo Accords. Neither side was particularly happy. And neither side cooperated. And so what we have, there were unaddressed issues. What we have today then is an increasingly expansionist Israel. In other words, it's getting bigger and bigger, taking more and more land. And the Palestinians are increasingly desperate, frustrated, and lashing out.
Right.
So we're seeing rising support for Hamas. However, support for Hamas is quite low historically among the Palestinians. The Palestinians don't want this violence either. I mean, who would? No one does.
Exactly. This is just, it's just incredibly,
It's complex, which is why it's great to have someone like Professor Hurd, who studied government at Wesleyan, international finance at Yale, political science at Johns Hopkins, to put these disciplines together and help us figure things out.
Very good. Elizabeth Hurd, Chair of Religious Studies and Professor of Political Science at Northwestern. Now, we want to bring you a discussion in the airline space. Bloomberg's Alex Steele and Guy Johnson speak with the CEOs of Delta and Virgin Atlantic. Let's head over to that discussion right now. We'll talk a little bit on the airline business coming up right now.
Okay, we welcome now our Bloomberg television and radio audiences. We need to talk about what's happening in the airline sector. So, Alex, I've got a theory. If you want to know what's happening with the global economy, you don't ask an economist. Definitely don't ask an economist. Instead, you want to ask an airline CEO. Why do you want to ask an airline CEO? Think about it. They sit at the intersection of pretty much everything. Consumer demand, business confidence, global supply chains, the labor market, geopolitics, fuel prices. The list goes on and on and on. So are we heading for a soft landing with the global economy, or is the landing going to be a hard one? We've got the perfect people to ask that question too. The CEO of Delta is, of course, Ed Bastian. The CEO of Virgin Atlantic is Shai Weiss. Delta, remember, owns 49% of Virgin, and Delta's just posted Q3 earnings. Fellas, nice to see you.
Hey, good to be with you.
So we were having a little chat in the green room beforehand. I talk to Shai every once in a while in London. When I talk to Shai, he talks to me about various things. But one of the things he talks to me about is the impact that he's had on you, Ed. In many ways, this can be demonstrated. But I think the most critical way it can be demonstrated is by what you're wearing on your feet. He tells me that he is responsible for you being cooler, for your footwear being better. He takes credit for all of this.
He does.
So we've got to clear this up before we start the interview.
Well,
is this true?
There's no question he gets a lot of the credit for me being cooler.
Okay.
That's
a good start.
The footwear, I'm not so sure. There's a lot of people that feel like they've taken ownership of my footwear of choice. So Shai has a line he has to stand in.
What is that? So that's a not really, actually.
I think
he's throwing some shade.
The only thing I would add to that, if you look at the timeline, Ed admits it happened in the last 5 years. We've known each other for 11 years. Go figure.
He was in the queue.
He's in the queue.
I need him to get him to start wearing ties, and then I'll maybe give him his.
I was going to ask you about this. I don't think I've ever seen him in a tie, ever.
I think that's right.
Okay. I think we've resolved this. We've resolved this issue. Okay. Everybody's talking about landings at the moment. So let's talk about landings. As I said at the beginning, this conversation kind of brings everything together. You guys see absolutely everything. Ed, you've got a credit card business, you've got an oil refinery, you've got all of these things that allow you to figure out what is happening in the world right now. If you were to describe a landing that the US economy is going to have, the global economy is going to have, what kind of a landing do you see?
Well, this has been the most forecasted recession. I've been in business over 40 years that I think I've ever seen. And as far as I'm concerned, I think we're going to have a good landing with respect to the confluence of financial variables we're talking about. We have a consumer in our country that is reasonably in good shape, particularly as you get to the upper end of the income strata. In our business specifically, air travel, 75% of our revenues come from the top 40% of consumers, consumers that have household earnings of $100,000 a year or greater. And at Delta, that number is arguably even higher. In Virgin, I'd suggest it's also higher in terms of the higher percent. That cohort, and the Fed just released this data just last week, coincidentally, but we've been touting this for some time, accumulated over $30 trillion of net worth from real estate, the market, savings, from pre-pandemic to current times. So our consumer is in really, really good shape. The reality is that you got winners and losers in this economy, and the goods sector that people accelerated purchases during the pandemic aren't maybe doing as well But if you live in the experience economy, who most of us do, it's doing quite well.
I think we need the Alex indicator for this because I'm a SkyMiles Delta person. I took a lot of trips last year. I flew business class. I am what you're describing.
Yeah, I love you.
But don't love me yet because we're not doing that this year. We're gonna like hunker down. We're saving. I mean, I feel like I'm a good example of sort of what you're trying to get at. How can you be so reliant that I'm going to keep spending?
Well, if you look at our planes are full. Our planes are full almost everywhere you go, particularly internationally. The international economy is still recovering from COVID. The other indicator I tell people is if you look at a statistic, you guys are about the math and the analytics. If you look at the airline industry has a lot going on, to your point, Guy. There is one number in the airline industry that's proven resilient over 50 years, and that's the percent of money spent on air travel and the size of the economy.
Yeah.
And it's 1.3%, year in and year out. It broke during the pandemic, obviously, because people couldn't travel. But that gap in 20 through 22 of people that wanted to travel, the inherent value of the size of the economy versus people that could, that gap was over $300 billion that people could not spend. So we're just now starting to get back to normalized trends. So it's going to continue to stay strong, I think, for years to come.
If I could just... I don't think you've ever been this quiet, by the way.
This is good influence. This is really good influence I'm having on you.
He gets your shoes.
I'm just thinking about the Thai proposition here, and I don't know how to respond. But if I can just add, I think the U.S. is slightly different than what we're saying in the U.K. And I think it's a story of two halves. If you look at our numbers, we're probably about 95% of 2019 in terms of overall travel. In terms of the consumer, the retail side of it, we're probably at 115% in terms of revenue and about 95% of demand. But on the corporate side, we're probably around 75%, and that still underlines a very strong recovery in the U.S. and a weaker recovery.
Do you think that's coming back? Like, what is happening here? Is this a permanent shift?
Yeah, and you know, we always think about, is this a structural or a transitory shift? It's hard to say because we're seeing both the tech sector, of course, the strike in the media and entertainment and the West Coast, and just a general sensation that things need to hunker down a bit because of this constant discussion on recession. So I think it's difficult to say. What we are seeing is longer booking cycles. So even the corporates are buying well in advance, and the shorter end bookings tend to, take it a bit more cautiously. But I think overall, both Ed and I would agree that we're just seeing the recovery of the international markets. There is a softer landing or a good landing, as Ed said, for the U.S. economy. Europe has got to be probably a year behind that. So there's so much more to bring it back to 2019 levels and beyond. I think it's really the beyond that is interesting.
Mike Worth was sitting in that chair a few minutes ago. I said you were coming, Ed. He's like asking me about the SkyMiles story.
He did. He actually did.
I love you too, Mike.
You rolled it out. You rolled out the changes. You've had to roll some of it back. What kind of feedback are you getting now in terms of you've got really loyal customers? They were obviously had their noses out of joint a little bit. Do you think you've got the balance right now?
You never get the balance right in aggregate when you have so many different people with an opinion. The two things that we saw when we made the change, first of all, the reason we made the changes is because, and Alex, you fly as you know this, there is a lot of demand for our premium product, our premium services, our clubs, our Delta One product, the telephone line, et cetera. We needed to rebalance because we had far more premium customers than ever. And we're investing in premium assets, but we just can't continue to keep up with the demand set that we have. Any individual looks at that as to how it's going to affect them, him or her, and so you're going to get a lot of opinions. There were some things that we did that I thought were maybe too aggressive in trying to get to that equilibrium quickly. And so we pulled back and we said we got to go at this at a much more measured pace, understanding as we build new premium clubs, new premium assets to allow the demand set to be satisfied maybe in a little bit better manner.
So to that point, I had to wait online to get into the lounge when I went to France in business class.
She was very upset about
this. I was very upset. It was definitely an entitled New Yorker moment for me at JFK. But what else are you looking at? Are there other things in the Sky Miles program that now is going to be on board for tweaking?
Well, the lounge access certainly was one of the important things. The lifetime, see, we took miles out of the equation. We've had this balance between miles. We're called Sky Miles.
You got to change the name?
No.
Sky Money.
No. But we are making it much more dollar denominated in terms of loyalty, and as compared to solely miles, which is what it historically had been. And we've been transitioning for quite a number of years, and so we've had an element of both. People have found it confusing trying to keep up miles and dollars, so we move pretty quickly. We've pulled back in some ways. People that have long-time loyalty with the airline in terms of miles in seats, we're grandfathering and creating new statuses for them. So we're trying to find a good equilibrium here.
So one of the things that occurred to me as I watched this unfold was, what people are really saying is getting through an airport is really hard. They want to make that journey through the airport easier. Once they get on board, fine. But getting through the airport is a tough.
Depends on who you fly. It's fine. Yes.
Okay.
Good disclaimer. Nicely done.
Are you, when you look at the airports that you operate in, are you happy with the airports that you're dealing with right now? Terminal 3, we've got new scanners coming through. Are they going to work? Is the Terminal 3 experience what it would like you to, what you would like it to be? Because a lot of what Ed's been talking about is that initial experience of going through the airport.
Indeed, and you know, we look at journeys rather than just the point of flying. So end to end, and our impact, of course, is the greatest in our clubhouses, in our lounges that we share with Delta, and of course on the plane. But if we could see a better experience at airports, especially at Heathrow, but around the world, that would make a tremendous difference. And indeed, you know, Terminal 3 at Heathrow is the home of Virgin, home of Delta, and it's the oldest terminal. It's over 60 years old. So we need to think of what next for that experience and how we can, with the new leadership team at Heathrow, make a new home for our customers. But, you know, overall, with safety, which I think is, you know, new systems and new machines, joining up the biometrics and a quicker passage of your baggage. There are many, many things we can do, but I wish we could control it from start to finish all over the world. That's never going to happen.
Yep. Ed, we started off the conversation talking about all the things you do, which gives you great visibility on what's happening with the economy. I was thinking about, we were talking about this morning. Is Delta a conglomerate? It's got an airline. It's got a refinery, it's got a card business, it's got a really big maintenance business. You put all this together, is the whole fit logical? Can I think of Delta as a conglomerate? You said earlier in the interview, we are an airline. Are you an airline, or are you just an airline?
We are an airline, but we also appreciate the fact that the airline business has a lot of volatility to it.
Right, and this helps smooth that out.
And so what we've been after is trying to find a more diversified stream of earnings for stability for our investor base, for our employees, for our customers, so that we can ride through these challenging times, turbulent times that we inevitably have seen and will continue to see. So with the credit card revenues being a big part of it through American Express, through our MRO in terms of third-party servicing, through the work we're doing, trying to control fuel. People think about the airlines as having a lot of factors outside of your control. It's implied a little bit in your question. We've taken a contrarian view for many years at Delta. We control much more and focus on things we can control as compared to things that we can't control, and trying to do a better job of managing that. And that's what you're seeing. So you're seeing, I wouldn't call it a conglomerate, but you're seeing an airline taking control of its future and its outcome. And as a result of that, the market also gives us value. We're the highest market cap in the world in terms of any airline out there, and also the top revenues.
Which brings us to geopolitics. And sort of how to hedge that risk. And obviously what's happening in Israel has created a lot of strife within the industry. Shai, I know you're also Israeli, so this is a particularly vulnerable issue as well. Do we know, can we quantify yet what losing those, the air traffic is going to do for earnings, et cetera?
Well, I'll start with that one. You know, the situation in Israel, of course, after the atrocities of October the 7th is still unpredictable. So I think there are Right now, the major impact has been, of course, people are not flying into Israel, and because of that, they're not flying also to the area, into Jordan, into Egypt, into other locations. And there has been an immediate impact on the price of fuel, which has gone up, gone up quite considerably since then. I think from here on, it depends on what the outcomes. If Israel can contain its war to the south and to Gaza and really taking out the Hamas, then that's one outcome. And if, God forbid, it becomes a much more of a regional conflict, then we don't know how it's going to impact. But I think, overall, war in the Middle East is always a dampening, but I don't think we've seen tremendous amount. We have 3 flights a day, I think, so we have 2 flights a day. Delta has 3 flights a day to Israel, and of course, we're not flying until it's safe to do so. But we'll have to see what the broader implications are.
Let's wrap it up. Ed, you're here in New York because you're getting a CEO of the Year award.
Thank you.
This evening. Congratulations.
Thank you.
What does that mean to you? What does that mean to the airline?
Well, first of all, it's because of the 100,000 women and men of Delta Airlines that I'm receiving that award. So on my behalf, I'm accepting it, but it's really for our team, because our team did an incredible job managing through the pandemic, and I think that was the reason why we were selected to receive this award. It's a great honor to be recognized by your peers across multiple industries, but it's really a great honor for our people because I'm really proud, because they're the real heroes in my field. They came in every single day when people were told to stay home. Yep. We kept the airways open during the worst of times, putting our lives at risk to make certain that doctors and nurses and frontline responders could get to where they need to be. No one that was traveling during the pandemic wanted to travel. People were traveling because they had to travel. And we were, and it wasn't just Delta, it was the airlines as a whole that kept the airways open, that enabled our country to recover and manage through this. And 3 years later, it's remarkable. 3 years ago, we were down to only 10% of our revenues. This year, we just reported our third quarter results, record high in terms of revenues ever, because of the hard work they did during that period of time. And of course, the great loyalty we have from our customers.
Guys, it's great to see you.
Good to see you. Thank you.
Thanks for stopping by.
Thank you.
Yeah, I think we cleared up the footwear issue.
But now the tie's the issue, so come
Tie's
back.
the issue, so I'm working on ties with them.
So you're going to take yours off?
Maybe an ascot. What do you think?
That I would pay good money to see.
I would even buy it for them.
There you go.
Me too. I know what I'm.
It's a new fund created. Thank you very much, both. And Alex.
Next birthday present for Shai Weiss is definitely some sort of neckwear. Fellas, great to see you. Thank you very much indeed. Ed Bastian from Delta, Shai Weiss from Virgin Atlantic.
All right, very good. There we go. Guy Johnson and Alex Steele interviewing the CEOs of Delta Airlines and Virgin Atlantic. Basically, the message is, listening to both of those, that business is back, and I think we saw the leisure traveler come back first, and then from what we're hearing from these gentlemen, we're starting to, the business travelers coming back as well, very close to the existing levels of traffic before the pandemic. So it's interesting. I'm just taking a look at the stocks. The stock for Delta, it's kind of flat on the year.
It's down like 1-2% on the year, right?
Yeah, and it's they're mentioning that Delta is the biggest airline out there in terms of market cap, $20 billion market cap. United is number 2 at 11. So Delta, I wasn't aware, was that big relative to its peers.
And it's done better over the last 5 years than United, as well as doing better than Southwest. Although I will say doing better means it's only down 37%.
Yep.
Over the last 5 years.
I'm out of Newark. I fly out of Newark, so I'm captive to United, and by and large, they get me to where I want to go. I mean, who knows?
United actually let me fly with Steve, my Rottweiler, in a business class seat.
Yeah, that would not have happened on
which
my
is pretty
watch.
sweet.
Love
to Berlin.
Steve, but I don't want a Rottweiler sitting next to me for like 8 hours. We're gonna have more coming up.
He's extremely polite.
Let's get some company news right now with Steve Rappaport.
Paul, it's another major merger in the U.S. oil industry. Chevron is buying Hess in an all-stock deal worth $53 billion. Chevron CEO Mike Wirth tells Bloomberg TV it's the right time to bring Hess into the fold.
We have been talking for a while. There's a terrific alignment between the two companies, our portfolios, the cultures of the company and the people, and particularly as Hess's development in Guyana has continued to be de-risked and progress, what was at one point in time kind of a wider gap in valuation has narrowed, and the stocks of the two companies have traded into a range where it works for both of us. And so now's the time that those circumstances have come together, but for quite some time we've seen the fit and the appeal and been working on this.
That's Chevron CEO Mike Wirth. Roche Holdings is buying the maker of a promising treatment for inflammatory bowel disease, Bloomberg's Scott Carr reports.
Roche Holding will pay $7.1 billion to acquire Telavant Holdings. With the purchase, Roche continues to build on an array of holdings related to experimental medicines. This new therapy called RVT-3101 can be delivered at home via injection and has the potential to be applied to several other diseases. Roche plans to begin a global third-phase trial as soon as possible. Scott Carr, Bloomberg Radio.
Thanks, Scott. Reliance Industries is reportedly nearing a cash and stock deal to buy Walt Disney Company's India operations. The entertainment giant may sell a controlling stake in the Disney Star business, which values at around $10 billion. And those are the company stories we're following this hour. I'm Steve Rappaport. This is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, looking at these markets here, kind of mixed. We had the S&P up 0.3%. The Dow kind of unched on the day. NASDAQ up 0.5%. So the futures were looking for a sharply negative open, but we kind of turned things around a little bit. Yields pulling back. We have the 10-year. Let's call that out. It's at off 5 basis points now, 4.86%. We did hit earlier this morning 5.01% on the 10-year. That got everybody's attention, but we're now comfortably below that 5%. Again, 4.86 on your 10-year. Oil pulling back off about 1.5%, $86.70 for WTI crude oil. So we're seeing that pull back there. Right now, let's head down to Washington, D.C. Amy Mars has world and national news for us.
All right, thank you, Paul. House Republicans set up a 9-man contest for the Speaker's post, signaling what may be a drawn-out vote to fill the vacancy this week. Republicans are returning to Washington today for a Speaker's Candidates Forum tonight, and they'll start the formal election process tomorrow. More on this now from Bloomberg's Anne-Marie Hordern in Washington.
Can any one of these men get to 217 on the House floor? One analyst at Cook Political Report said the best person that has the best chance of getting to 217 is someone who hasn't been around long enough to tick off more than 4 members of his colleagues.
Bloomberg's Anne-Marie Hordern in Washington. Foreign companies that operate in China may be finding their confidence shaken after a series of recent arrests. More on this from Bloomberg's Alex Webb.
Terry Gu, the founder of Foxconn, is running to be president of Taiwan. So is this an effort to wield some influence in this territory, in this country, which they deem a territory of China, and trying to mess with that a little bit?
Bloomberg's Alex Webb reporting Christmas still 2 months away, but the holiday shopping season is already getting started. Best Buy launching their Black Friday sales later this week as a way to appease customer demand. Thomas McMillan heads the Center for Retailing Studies at Texas A&M.
We're starting to see more and more consumers start to want to shop in October or earlier.
Thomas McMillan says over the past few years, Black Friday has turned into Black November, and now it's Black October. The National Retail Federation says those celebrating winter holidays expect to spend $875 this year on gifts, decorations, and food. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Amy Morris, and this is Bloomberg. Paul and Matt.
All right, Amy Morris, thank you so much. We appreciate it. You know, living around here, the Hess name, it's pretty big around these parts of Metro New York area. Primarily because Leon Hess owned the New York Jets. But there's a great story on the Bloomberg terminal today.
Is that why the colors are white and green?
Yes. Leon Hess founded Hess Corp with a second-hand truck delivering fuel oil during the Depression. 90 years later, his son John Hess has agreed to sell the U.S. oil producer to Chevron in a deal that crystallizes the value of the stake controlled by the family at about $5 billion. That's pretty solid.
Amazing.
That's just another great, American success story from that part, that time and place where a lot of those great companies were built here. So they own a lot of stock. They're going to own a lot of stock in. This is an all-stock transaction, so they're going to own a lot of stock in Chevron. They'll be one of the larger shareholders there. And John
it's a
Hess,
$53 billion deal, and yet Hess has only got a $5 billion market cap, is what you're saying?
Yeah. Or that's what the family stake is. That's what the
I see. Okay, that's the stake. Yeah.
So, and they're going to roll that into Chevron. So they're going to be a shareholder there. John Hess said that on the Bloomberg television just earlier this morning, being interviewed by Guy Johnson and Alex Steele. So pretty interesting story there. I mean, again,
and the trucks is like an East Coast thing. So they come out every year with a new toy.
Yep.
And everybody in the tri-state area, I'm going to guess, or at least New Jersey.
I'd say it's tri-state. It may even be more broader than that. I don't know. But it's just always been something that, for my kids, they always got a Hess truck underneath a Christmas tree growing up. And I think that's just a kind of a tradition. They've been doing it for 60 years. I think next year is going to be the 60th year. And John Hess did say on the interview today on Bloomberg Television that he's got a deal with the CEO of Chevron that they're going to continue with the Hess truck. So that's pretty cool. That was the first question I told Alex Steele. She's got to ask.
And the Jets beat the Eagles last weekend?
And the Jets beat the Eagles last week. And now the Jets play the Giants this coming weekend. All kinds of stuff happening here in the metro area. So again, big trade in the M&A, in the energy space. Hess family now worth $5 billion of stock.
This is Bloomberg Markets with Paul Sweeney and Matt Miller.
Why were the economists so wrong? What are the economists getting wrong?
Isn't this a slam dunk time to buy U.S. Treasuries?
Soft landing, hard landing, no landing. I don't know.
True. What the heck does that mean?
I don't know.
Breaking market news and insight from Bloomberg experts.
We're going to be in an environment with higher rates for longer.
The 5-day in-office work week is effectively dead.
It's definitely a good sign that we're not ready to land this economy just yet.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with, one of the folks I think is one of the smartest voices in this building here, Bobby Ghosh. He's a columnist for Bloomberg Opinion. He's going to come in here and give us his latest thoughts on what we're seeing out of Israel in the war with Hamas. So we'll get his latest thoughts. And then in our C-Suite conversation today, Fraser Atkinson, CEO of Green Power Motor Company, he's going to join us to discuss his company's aim to make battery electric buses and trucks affordable and other green power initiatives. So we got a lot of good stuff going on coming up. But right now, let's go to Charlie Pellet, and we'll get a Bloomberg Business Flash.
I thank you very much, Paul. And I got green power on the screens right now with the Dow, the S&P, NASDAQ solidly in the green. Let's begin with the NASDAQ Composite Index, up now by 0.6%. We've got the Dow higher by 23 points. That is a gain of just about 0.1%. The S&P up 16, up by 0.4%. Bottom line here, stock market is halting a 4-day slide despite a renewed bout of Treasury volatility, with investors awaiting earnings from a handful of big tech companies. So the 10-year that did break equity portfolios, that question for Joe Davis, Global Chief Economist and Head of Investment Strategy at the Vanguard Group, and he was a guest this morning on Bloomberg Surveillance.
We continue to operate in an environment, at least for the U.S. market, where risk are towards the downside in the near term, and that's in part because valuations, even when you account for the high interest rates, look stretched. And so again, there's this push and pull between longer term positive news because we have higher rates, which compound for everybody. But in the near term, we certainly have headwinds from a valuation perspective.
And you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. Right now, we do have the 10-year yielding 4.86%. We have got the 2-year 5.08%. Gold down $7 the ounce to $19.74. Drop there of 0.4%. West Texas Intermediate crude 86.56 a barrel. WTI down now by 1.7%. It is the deal of the day in the oil industry. Chevron buying Hess. We were just talking about it. Chevron shares lower now by 2.7%. Hess Corp shares, they're down by 0.5%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Matt Miller, Paul Sweeney, live here in our Bloomberg Interactive Broker studio. We are streaming live on YouTube, so head over to youtube.com and search Bloomberg Radio. Matt, I want to bring in my newest and bestest buddy. That is Emily Graffeo. She's an equities reporter for Bloomberg. But her Virginia Cavaliers had a big, big win this past week, and they won their second game of the year. So I was rooting for them hard because they were playing the Tar Heels of the University of North Carolina, and I root for Duke and whoever plays Carolina. So a win-win for me. Great win for the Cavaliers beating number 10.
The Wahoos.
Yep.
First ever win for Virginia versus a top 10 team on the road in Virginia football history.
Really? Mm-hmm. And I did not see that coming, and the Vegas bookmakers did not see that coming. So a nice turnaround.
It was a big upset. 31-27 against
my
number
Dukies
10
went down to
UNC.
Florida State, took it on the chin as Florida State Seminoles. They are back, baby. They looked really good. So that was a tough one.
I heard that the Ohio State Buckeyes beat Penn State.
Yeah, and I'll tell you what, neither team looked good. I think Michigan's going to wipe up both of them. But Penn State.
We could place a wager on that, because Dan Ives owes me $20 already from the Penn State.
All right,
loss.
we'll do a little parlay there.
Yeah.
We'll figure out what's going on there. Emily, let's get to business here. What are you seeing in the markets?
Well, mostly green on the screen, but we do have some red here when it comes to Okta, because that stock fell about 12% on Friday, and it's continuing to fall today.
What's the ticker?
Now down about 8%. The ticker is Okta.
OKTA.
And what happened was that on Friday there was news that this is an identity verification company. Hackers used a stolen credential to access the support case management system.
No.
And now we have a number of analysts coming out today saying that this is really going to hit their sales. But this is a pretty big move, down 8% today, extending the decline from Friday. There's a story on the Bloomberg by Katrina Manson. Hackers were able to view some files uploaded by Okta customers.
It's never good if you're the gatekeeper and somebody gets in the gate with your keys, you know?
Yes.
All right, what else we got?
Well, it's also a really big earnings week. We have $15 trillion worth of market cap reporting.
40% of the S&P.
Yeah. One of the themes I think to watch for is how companies deal with rising costs. We have a number of auto companies, GM reporting this week, and also Ford. And we have Citi estimating that potentially there could be a hit there from the auto workers' strike.
And the strike expanding today. So, Matt, I mean, they're hitting the Ram trucks, right?
Yeah,
that's
the Ram 1500 trucks. It's a huge moneymaker. I mean, incredibly popular vehicle as well,
Sun
but
does that.
very high margins. I mean, this is where they make their money. So, you know, they hit, the other companies got mid-sized pickup trucks hit and the Bronco, which is important, and Jeep got the Wrangler hit, also important, but they'd made so many of those Wranglers before the strike, and there was a lot of inventory. This is going to hurt. This is going to hurt. Carlos Tavares is going to have to pay attention.
From what I understand on this strike, the pay thing, whether it's 20% or 30%, they'll figure that out. It's the job security thing. And if I'm an automaker, I can't offer that to you because I don't know what these things are going to look like. I don't know how I'm going to manufacture these products. I don't know where I'm going to manufacture them.
Well, especially if your plan was, I mean, they're going to keep making Ram trucks, obviously. But the other brands that they have, Jeep is trying to turn to a luxury brand, and they're charging commensurate prices. But Dodge and Chrysler, what do they even make anymore? You know, they're not going to make the Challenger and the Charger in this form. This is the last year, I know, because
you have one.
I bought one because of that reason.
What kind of engine does it have again?
A 6.4-liter naturally aspirated Hemi V8.
Nice,
no big deal.
See, that's what
and Chrysler, they have that one minivan, the Pacifica, which is I think a popular truck, but that's all they have. So at those factories.
I am out of the minivan market. We were in the minivan market for a good solid 20 years. Out, baby.
I can't do it. There's no way I can do it. No matter how many kids I have. I'd rather buy a school bus than a minivan.
It worked. Style.
Anything else, Emily?
Well, also just looking at Chipotle too.
Nice.
That company, California, raised the minimum wage for that industry. So we have some BI analysts speculating that that could hit their margins.
All right, very good. Emily Grafeo, the pride of the University of Virginia in Charlottesville. Cavaliers are now 2-5. Watch out in the ACC. Emily Grafeo covers all the markets for us, Bloomberg News. Bobby Ghosh joins us, and a very stylishly dressed Bobby Ghosh, by the way, I might add, for those watching on YouTube. He's a columnist for Bloomberg Opinion. He's been really helpful to us trying to understand what's really happening in the Middle East as we all try to educate ourselves to the history here and kind of the challenges that are part of the region for such a long time. Bobby, thanks so much for joining us here. It appears that it seems like every Western leader has made his or her way to Israel, trying to get, I guess, urge some restraint. And so far, the Israelis have not gone in. They have not invaded Gaza. What do you think is happening there behind the scenes?
Well, it's a little hard to know. We know that Benjamin Netanyahu is under enormous pressure from within Israel to go in and inflict some real pain on Hamas. And he's under international pressure, primarily from the White House, but also from Europe, to restrain himself. And he's not built a career on restraint. So you have to think that his instincts are to go in hard. But there are some other factors involved. He has to show due deference to the United States, as he has acknowledged in private meetings with his cabinet. The U.S. is a very important ally. He can't afford to break away too much. He has to show Biden appropriate deference. But there may be other factors at work. They need, there are these 220-odd hostages. This is this makes it a very different situation from all the previous times that Israel has gone into Gaza. This time there are 200-plus people. They don't know where they are. There's a real risk that an operation in Gaza leads to these people being killed.
That's why they took them, right? I thought that was the whole. Hamas will attack out of a school, out of a mosque, out of a hospital, and they took these hostages to be additional human shields. They used their own people that way.
They do.
And, I'm confused because we don't negotiate with terrorists, do we? That's an official U.S. policy.
We don't negotiate with terrorists. We allow our friends to do it for us. We've always done that.
Okay.
I mean, the Qataris have performed that function for us for years and years and years. And other Arab states have also acted as intermediaries. There's another consideration for Israel, don't forget. They're talking about eliminating Hamas. Let's set aside for a moment whether that's even possible. But this is a big, big target that they're setting for themselves. A target that big requires much more than your typical roll in some tanks, blow up some buildings, and then get out again. This will involve a massive number of troops. This will require remaining in Gaza for a certain number of times. Weeks, days, months, we don't know yet, but for a certain amount of time. This is an enormous logistical exercise. That alone accounts for some of this delay. This is a bigger operation that they're planning than they have ever done before, and that's going to take much more time. When you call up 360,000 people, you can't just throw them into the meat grinder that Hamas is creating and preparing for them in Gaza. You can't just throw them in overnight. It is going to take weeks to prepare that offensive. So there are a number of reasons behind this. I still think that an offensive will take place. How big? Hard to tell. How soon? Impossible to know, but one is coming.
One of the big question marks is what happens to the north, right? And we always talk about Hezbollah. One question that's been on my mind today: why don't we just call it Iran? Why do we even bother with the silly naming of the whatever group? I mean, they're essentially Iran's army, right? Why does the U.S. Why does the Biden administration kind of dance around this?
Because if you call it what it is, then you got to do something about it.
Why don't they do something about it?
We don't want to do something about it. We don't want to go into war with Iran. There's no appetite in this country for the United States to go into a war with Iran.
We've been appeasing them for what? 15 years.
But that is true. But this country, after and this administration, after Afghanistan, after Iraq, has no appetite. I mean, any number of polls will show that the United States is not in the mood to go into another war. And if you call out Iran, then you're putting yourself, and by the way, it's not just the US, even the Israelis, who know full well that Iran is behind all of this, are very reluctant. They keep saying, we've got no smoking guns. We know Iran supports these people, but we've got no smoking guns. Because if Israel says Iran is doing this, then Bibi Netanyahu's got to do something about it. Nobody wants to bell that cat. Everybody wants to deal with these things, the sideshow.
Well,
no one
it's
wants
not like
to deal
Netanyahu in the past has curbed his aggression for fear of reprisal later.
No,
I wonder about, we were talking with Elizabeth Hurd earlier, the professor of political science at Northwestern University, and she said when they made the Oslo agreements in the 90s, the Israelis immediately went over and started putting settlements into the land that they agreed the Palestinians could have in the West Bank. Has Netanyahu, does he bear responsibility for the growth of this
absolutely
animosity?
He does. Yeah, absolutely he does. And his own people are now there. Again, there's polling coming out of Israel that show a majority of Israelis directly blame him for all of this.
Really? Wow.
Absolutely. They blame him. The major newspapers, Haaretz and others, have written in the middle of a war, you usually don't do this, but they've written strong editorials directly pointing the finger at Netanyahu. Polls show that Israelis want him out. The only question is whether you change horses in the middle of the stream or whether you wait until after the current tensions have been diffused before you make that change. But nobody is shying away from calling out Netanyahu as being responsible for all of this. Mr. Security, he's the guy who keeps winning elections or coming close to winning elections in Israel, on the strength of promising people that I will keep you safe from Hamas. And he's the guy who was sleeping at the wheel when this happened.
Exactly. I don't know if there's polling out there that says, what does the average Israeli, what does the average Palestinian want? If you ask the average Israeli and average Palestinian, would they say, we just have to have a two-state solution? I know we're both going to be disappointed. I know none of us want that, but that's the only thing that will work here. Is there a feeling amongst the populace that that's where we ultimately have to get to?
Well, I think if you ask the Palestinians, that's what they would say. If you ask the Israelis, you'd get a more complicated response. This moment in time,
Yes.
after the events
Yes.
of 2 weeks ago, the trauma of that, you might find people sort of resisting that idea because they want, first and foremost, they want somebody to be held to account for what happened on the 7th of October.
Yep.
But in time, when cooler heads prevail, I think, it's not out of the realms of possibility that a lot of Israelis, perhaps even the majority of Israelis, will say, you know what, we can't live in this endless cycle
They have so much
of
going for them.
uncertainty and violence. We've got so much going for us. We need to put this problem to bed. Let's figure out a way forward to do this that allows both our people's dignity, justice, a chance of a better future.
Longer term. So in the short term, we've got to figure out a solution to keep power in Gazan hospitals and to keep water, available, clean drinking water for them. You can't really send fuel into Gaza, can you? Because Hamas will just take it and use it for their war machine. So how do you deal with that conundrum?
Yeah, you can't keep the hospitals running without the fuel. You can't keep the people fed without the fuel.
Desalination plants.
The desalination plants. Winter is coming. There is no easy answer to that. Fuel has to go in. Whether some of that fuel will land in the hands of Hamas, listen, I bet you Hamas has been planning this operation for 2-3 years, is our best intelligence on this. You bet they've got stashed away lots and lots of fuel for what they have in mind. They're not stashing away fuel for ordinary people, but they're stashing away enough fuel for themselves. We have to worry about the ordinary people.
And they're happy to let their people die for a lack of fuel.
Yeah, they've done that. They've done that forever. Their whole existence is predicated on their own people as cannon fodder and trying to destroy.
Naive question
Israel.
of the day. Is there any reason to think why the Palestinian people wouldn't throw out Hamas?
Well, they can't. They don't have the means to do so. Hamas has a monopoly of violence in the Palestinian territory, particularly in Gaza. It has a complete monopoly of violence. It's like asking the hostages to shoot you're asking a hostage why they don't do something about their captors. The captors are the ones with the weapons. They are the ones with the propensity and the history of violence. We are asking too much of ordinary civilians if we are asking them to rise up against these guys. Look at what they've done to an armed enemy like Israel.
Yeah.
What would they do to their own unarmed people?
Wow. It's just overwhelming, and I guess that's what it's been for decades now, but it's just coming to the light once again. Bobby Ghosh, thank you so much for joining us. We really appreciate getting your insights and the benefit of your experience. Bobby Ghosh, he's a columnist for Bloomberg Opinion, joining us live here in our Bloomberg Interactive Broker studio, and definitely upping the entire game here in the studio. We're going to have more coming up. This is Bloomberg. Let's get some company news right now. Steve Rappaport.
Paul, Chevron adds another energy company to its portfolio, acquiring Hess in an all-stock deal worth $53 billion. Hess CEO John Hess tells Bloomberg TV the company could have continued to operate on its own, but teaming up with Chevron made sense.
We're celebrating our 90th anniversary as a company this year. We have the best hand in the business, the best growth portfolio in the business, and we're just executing the strategy to go forward. But, Chevron brings forward that diverse portfolio of assets, strong balance sheet, as well as high cash returns. And when you put those strengths together with our growth strengths, you really create, I'd say, the premier energy company that's out there.
That's Hess CEO John Hess. Chevron will pay $171 a share for Hess, roughly a 10% premium. Parents, fear not, the iconic Hess toy trucks will still be available. Chinese state media reports authorities are investigating Apple iPhone maker Foxconn. Bloomberg's Stephen Engel reports from Hong Kong.
They are saying that essentially Foxconn, which has, of course, the big iPhone city in Zhengzhou in Henan province, they're being investigated by tax authorities for their subsidiaries in Guangdong and in Jiangsu province. Plus, they're being investigated by natural resources officials.
Bloomberg's Stephen Engel. Foxconn says it's cooperating with authorities. And the United Auto Workers says it shut down production at a Stellantis plant which makes Ram trucks after 6,800 members went on strike this morning. The union says the walkout against GM, Stellantis, and Ford has grown to over 40,000 members since the strike began 6 weeks ago. Those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:20 on Wall Street. We do check markets all day long at Bloomberg. The Dow now in the red. Choppy session. S&P, NASDAQ, they're both higher. The Dow lower now by 50 points, a decline of 0.1%. The S&P, though, has halted a 4-day slide despite a renewed bout of Treasury volatility, with investors awaiting earnings from a handful of big tech companies. The S&P right now up 9. That is a gain of 0.2%. The NASDAQ Composite Index up 80, a gain there of 0.6%. 10-year yield 4.87%, with the 2-year right now 5.08% on the 2-year. Spot gold lower by $4.50 the ounce to $19.76, down by about 0.2%, while West Texas Intermediate crude down 1.9%, $86.42 a barrel. It is the day's big deal. Chevron buying Hess Corp for $53 billion, as we have been reporting. It is a deal aimed at boosting production growth as the American oil industry bets on an enduring future for fossil fuels. Shares of both companies, however, lower. Chevron down 3.4%. Hess Corp lower now by 1.2%. Again, recapping, looking at a mixed market with the Dow down 15, down by about 0.1%. S&P up by 0.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pell, thank you so much. We appreciate that. As always, Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're streaming live on that YouTube thing, so go check it out. Search Bloomberg Radio here. C-suite conversation, an interesting one here today. It's funny when we have a big fossil fuel deal, Chevron buying Hess, we got to talk about green, the whole energy thing here and going green here. And one of the areas we're going green, Matt, I'm not sure if you're aware of this, is in the kind of the automobile bus truck thing there. They want to go electric.
Yeah, no, absolutely.
So Fraser Atkinson.
In fact, they're the first ones really to go electric, because the municipalities need to show their green creds. And I mean, frankly, there's so many buses and, sort of mass transit vehicles on the road that it's better for all of us if they're not spewing out nasty things from the exhaust pipe.
Absolutely. Fraser Atkinson joins us. He's the CEO of Green Power Motor Company. It's a publicly traded company. GP is a symbol. Talk to us. First of all, Fraser, thanks so much for joining us. Really appreciate it. Can you tell us what you guys do at Green Power? What's your play in the EV space?
Well, thanks for having us on your show. And we're focused on the medium and heavy duty space, which is quite different than the traditional light duty automotive. Those vehicles tend to be used less than an hour a day. And our vehicles are on average used 12, 14, 16 hours a day. And we even have a few deployments where they're used 24 hours a day. And they do top charging in the early hours of the morning. So that's the space that we're focused on, and it's been a little slower to catch on, but we're finding that it's got some serious legs for both the current and the future.
Fraser, how do you juice those vehicles up for such industrial use? I mean, I would think, most electric vehicles have range of a few hours, and then you've got to plug them in for many more. How do you make sure that these electric buses have enough, energy to do their duty?
Well, most of the applications we're involved with tend to be lower speed and lots of stops and starts, which is absolutely ideal for an EV. In terms of charging, the Class 4 vehicles, which is our largest volume seller, both in terms of passenger, cargo, and as well the Type A school bus, is that particular set of vehicles, we can either charge with a level 2 or a DC fast charge. So we're very flexible and can be compatible with what the requirements might be, what a customer might need from the use of that vehicle.
So where do you make these electric school buses?
Well, we've got, we use contract manufacturers, similar to what Apple does with their various products. All of our products are designed and final assembly in the United States. We recently opened a facility in West Virginia. That was courtesy of the state of West Virginia, bought the facility for our use. And that is going to be our focus for our Type A, the smaller school bus, and the Type D, the larger school bus, where we see demand across the board for both of those products.
Is demand now starting to pick up exponentially? I mean, you've been at Green Power since 2010, so you've seen a solid 13 years of this business. Does it look a lot different in the last couple of years than it did to you for the first decade?
Well, the early years, there literally were no medium or heavy duty electric buses that had been deployed. The first one was 2011, 2012. And that was with a company that had already generated deliveries and sales in other jurisdictions. So the industry is really only 10 years old, or 10 plus. And the early years, the vehicles, the batteries were too heavy, the range wasn't able to satisfy even the most basic duty cycle. All that's changed to where now we can handle probably 96% of almost all duty cycles for medium or heavy duty truck or bus. And that's really helped fuel the interest in electrifying fleets. And then combined with money and mandates at both the federal and the state level, where certain operators are required to electrify fleets within certain time periods, has really created incredible tailwinds for the whole industry as well as our company.
Fraser, talk to us about kind of the sales process here. When you go to a school district, just describe for us how the sales process goes.
Typically, the school districts are very hands-on. They like to see and touch the vehicle. They like to have their various groups, whether it's the maintenance group, whether it's the drivers group, the trustees that really have to answer any questions that their constituents have. So we tend to do a lot of ride and drives or demonstrations of the vehicles, and often those aren't just one or twice, but there are multiple occasions. And once a particular organization is satisfied that, yes, this is the vehicle that they can see they want to move forward with, then depending on the state, some states require dealers be involved in the process. Others allow us to go direct. So we have a real mix in terms of our go-to-market strategy. But then we're engaged in terms of, essentially the big picture question, which is, how are they going to pay for it?
Yep.
And school districts are not organizations that have a lot of money. So it's the recent funding that has come in both federally and with certain states that has really fueled the excitement and the electrification around school buses.
So I want to get a sense, I'm just looking at your financial statements here, Fraser. How do you fund your growth? I see, you're a publicly traded company, but a market cap of only $71 million. Several $1 million of debt on the balance sheet and EBITDA negative. How do you fund your growth?
Well, our business model, we've had success in generating a gross profit on every sale or not every sale, but the combined sales of our vehicle every quarter, which is actually pretty unique in that most of our competition is still operating with a gross profit loss. In other words, every vehicle they sell, they're actually selling at a loss before any of their expenses. And our growth has been such that we are getting closer and closer to that important break even from a cash flow point of view. We also had built up our inventory that post when we went and did our NASDAQ IPO in the fall of 2020. We were able to move from building vehicles pursuant to customer orders to where we're actually able to build into inventory. And that was critical in getting some of the larger deals that we are now delivering into. So in our most recent quarter, our inventory actually was lower in terms of the overall amount that we had in inventory, because we've been able to shift to deliveries and fulfilling orders as a result of being able to show that we had the ability to satisfy the various order requirements. And we've been a low-cost operator. We've been able to manage our numbers so that our expenses compared to our peers are substantially less. So we don't have a large financial requirement. And lastly, we did have an ATM, or do have an ATM in place. We haven't drawn on it because we haven't needed it. But in the early part of 2023, as we were going through that inventory growth, we were able to take down about $5 million off our ATM.
Okay. Interesting story. Really interesting story. It looks like potentially some growth there going forward as maybe see some of that Inflation Reduction Act money come into the play here. Fraser Atkinson, he is the CEO of Green Power. They make electric school buses among some other vehicles. So that's
Which, by the way, you can imagine how much money you'd save on not only gas, but also maintenance. And regular school buses are kind of difficult to drive, but these will be very easy.
Yeah, it sounds like a pretty easy pitch to make, assuming the district has some money. With our news in New York City, here's Denise Pellegrini.
All right, yeah, we're just watching a lot of stuff right now. And let's start with that strike with the automakers, the auto strike expanding. United Auto Workers members at Stellantis money-making pickup truck plant in Sterling Heights, Michigan, they are off the job now. That means more than 40,000 workers now are striking against Detroit's big three automakers as we hit week 6 of this labor action. More fighting in the Middle East. Israel saying again today it has thwarted attempts to fire anti-tank missiles at it from Lebanon. And Bloomberg's Ross Matheson says Israel is stepping up military activity, and that's triggering new concerns.
Even as they're increasing their airstrikes into Gaza, we're also seeing an intensity in the north of Israel into the south of Lebanon. So we're seeing more skirmishes, we're seeing trading of fire, drones, and so on. And Israel warning, like Hezbollah, which is really occupying that area of Lebanon. And of course, Hezbollah is backed by Iran, and saying back off here, because what they're really fearing is you end up with 2 fronts in a war. You have Hamas, you have Gaza, but also you end up pulling in Hezbollah.
Bloomberg's Ross Matheson reporting there. The White House is also scrambling to try to prevent Israel from igniting a wider war, also hoping to get the hostages out. European leaders, meantime, joining the chorus of those clamoring for more aid for people in Gaza as a humanitarian crisis unfolds. And here we go again. House Republicans hearing from at least 9 contenders now for the speakership tonight. Looks like they're on track to hold a secret vote on a nominee. That could happen, and then it seems they have yet to coalesce around a candidate with Congress paralyzed for weeks. We did have former House Speaker Kevin McCarthy over the weekend recommending and backing Tom Emmers. He's from Minnesota. We'll see if they can coalesce around Emmers, and they could vote officially tomorrow. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Denise Pellegrini, and this is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow back in the green, up 15 points right now, higher by less than 1/10%. Choppy day so far. S&P holding on to an 18-point gain, up by about 0.4%. NASDAQ up 111, higher now by 0.9%. Stock market did halt a 4-day slide despite a renewed bout of Treasury volatility, and after falling almost 1% in the first 15 minutes of trading, the S&P 500 index is now back above the 4,200 mark, a key technical support, and represents a 50% retracement of the rally off the lows seen in the banking turmoil in March. So the S&P now higher by 16, up 0.4%. The Nasdaq Composite Index up 106 points right now, up by about 0.8%. 10-year yield 4.85%, with a 2-year now at 5.08%. Gold is down $4.50 the ounce to $19.76. That is a drop of 0.2%. West Texas Intermediate crude down 2.3%, $86.08 a barrel on WTI. United Auto Workers Union members at Stellantis' lucrative pickup truck plant in Sterling Heights, Michigan, walked off the job this morning. Word came from the head of the UAW. Now, David Welch heads up our Detroit bureau, and right here on surveillance this morning, he said, yes, it does mark a surprise escalation.
Look, it was just Friday afternoon when he said he wasn't expanding the strike because there was enough progress. He did still have complaints about each company not moving on certain issues, he being UAW President Sean Fain. And then here we are Monday morning, and he's walking up not just any old plant, but the Ram plant. It's their biggest plant, their most profitable. It's this is a big statement.
And you can hear more of that conversation on the Tape podcast. You can download it wherever you get your podcasts. Stellantis up 1.2%. Ford down 0.1%. GM up 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate that. Matt Miller, Paul Sweeney live here in our Bloomberg Interactive Broker studio, streaming live as well on YouTube. So you can head over to youtube.com and take a look at Bloomberg Radio. Let's continue our C-suite conversation. This time we're going to focus on the healthcare space, big pharma, biotechnology, therapeutics, all that good stuff. For that, we're joined by Joel Lewis. He's the CEO and president of Galectin Therapeutics. It's a publicly traded stock on NASDAQ. GALT is the symbol there. Joel, thanks so much for joining us here. Talk to us about what you guys are working on over at Galectin Therapeutics.
Hi, Matt. Hi, Paul. Thank you for having me today. It's we pronounce it Galectin Therapeutics. Actually, we are a We are a late-stage biotech company. We're conducting a large global pivotal trial. It's a phase 2b/3 trial in NASH cirrhosis.
What is NASH cirrhosis?
Yeah. So I think when people think about cirrhosis, they normally immediately go to cirrhosis caused by alcohol. Actually, the fastest growing segment of this patient population is getting cirrhosis from fatty liver disease. So NASH is sort of the technical term for fatty liver disease, non-alcoholic steatohepatitis. I won't say that again. We'll just call it fatty liver disease. And again, there's a large, a huge growing patient population. We are specifically focused on patients who have progressed all the way to cirrhosis.
So talk to us about, I guess, the treatment. How does your therapeutic work here?
Okay, so we have a carbohydrate molecule that actually targets galectin, specifically galectin-3, which has been associated with many inflammatory diseases. And when you think about cirrhosis, it's the ultimate inflammation that eventually leads to scar tissue. Our mechanism of action, we actually target activated macrophages, which is where galectin is produced, and we reduce the overexpression of galectin-3 when people have cirrhosis, and when you reduce that protein. You give your liver's a very regenerative organ actually, and you give it a chance to heal.
How big is this market, do you think? I know you guys size these markets out pretty closely.
So, and I don't need everybody to take just my word for it. So I was listening to the Fatty Liver Foundation, which is a patient advocacy group. That the estimate is that 1/3 of the world population has fatty liver.
Oof.
And now, when you say that, it's not fatty liver disease. It's just fat in their liver. So steatosis is what it's called, the medical term. And out of that potential patient group, right now in the U.S., the estimate from insurance reimbursement is 16 million, more than 16 million patients. We've seen estimates higher because obviously not everybody's insured. So we've seen estimates of up to 28 million people who actually have fatty liver disease that's progressed to NASH. And of those patients, 1 to 2 million of them will develop cirrhosis.
So what we've heard a lot about in the marketplace in the healthcare space over the last several months are these GLP-1 drugs, Ozempic, for example. How does that influence your part of the market?
Yeah, and I heard your podcast when you guys talked about that back in August with Stephen. So yeah, obviously there's a big drive, and most of the companies in the NASH space are targeting early stage fatty liver disease, and clearly, patients that lose weight have a good chance to not progress to cirrhosis. The issue is, I don't see how that all of those drugs are going to be so pervasive in the market. There's always going to be a set of patients that develop cirrhosis from fatty liver disease. And by the way, we happen to be doing our study in cirrhosis caused by fatty liver disease, but we do believe that this mechanism of action will work with all cirrhotic patients, and cirrhosis is caused by many things, including alcohol, including hepatitis. That's a much bigger problem in Asia than here. But we believe that this will always be a big patient population. And again, just so everybody knows, the only treatment for cirrhosis is liver transplant. There are no treatments for cirrhosis. And just to give everybody an idea, we do about 9,000 liver transplants a year in the U.S. Wow. I think people think that number is much bigger.
Yep. So where are you in the development of your therapeutics?
So we are conducting our phase 2b/3 adaptive pivotal trial. We expect data in Q4 of next year. It's an interim analysis, but if we repeat the results that we achieved in our phase 2 program, we will be seeking an accelerated approval at that point in time.
So what's an end game for your company and companies like yours? I'm not super familiar with the healthcare space, but it seems like every Monday we have a bunch of M&A trades where a big pharma company buys out a smaller pharma company to get access to their therapeutics or their drugs. Is that an exit for a company like yours?
I think most biotech companies have that as their exit strategy. There's clearly a segment of the biotech industry that wants to develop the drug themselves. That is not our exit strategy. To do that, you have to have large marketing departments and big departments that are looking at how you're going to price the drug and all those things. So yeah, that would be either license the IP or partner in some other way with pharma or a sale.
And this is not just for older people. I mean, I hear when we talk about fatty liver disease, it's also for children as well, right?
So there is fatty liver disease in children. They don't develop cirrhosis.
Right. Okay.
So yes, I would say that there is a growing problem with fatty liver disease in children, and certainly we have some peers in the space that are looking at those things. But we are really focused on the end stage of this disease where we believe there's the greatest medical need.
All right, very good. Joel Lewis, thank you so much. We appreciate it. CEO and president of Galectin Therapeutics. Again, GALT is the ticker to load into your Bloomberg terminal. Get that NASDAQ quote. It's about $100 million in market cap, up 75% year to date. So maybe some optimism out there in the street for this drug and this treatment. S&P 500, we're up 0.4%. The Dow's pretty much unchanged. NASDAQ getting a little bit of a lift here, up 0.8%. 10-year Treasury now trading 4.85%. 0.5%. We'll have more coming up. This is Bloomberg. Let's get some company news right now with Steve Rappaport.
Paul, Chevron agrees to buy Hess in the second major merger for the U.S. oil industry this month. The all-stock deal is worth $53 billion. Bloomberg News team leader of European oil, James Herron, tells us more about that transaction.
Hess is a sizable company with interests all over, but the things that were highlighted in the statement as being sort of the crown jewels of the Hess portfolio is 30% of 11 billion barrels of recoverable resources in Guyana, which is this is some offshore discoveries in South America. This is a fairly new oil area. It also gives Chevron some more acreage in the Bakken, which is a shale basin mainly in North Dakota, which has been around for a long time. It was part of the initial shale boom going back more than 10 years. And then it adds things from the Gulf of Mexico to Southeast Asia.
Bloomberg's Jane Herron in London. About 6,800 United Auto Workers members walked off the job at a Stellantis pickup truck plant in Michigan this morning. Bloomberg Detroit Bureau Chief David Welch says job security has been a big issue for Stellantis.
They've got that plant in Belvidere, Illinois, makes small cars, small crossovers. They haven't guaranteed a new product there. There's an engine plant in southeastern Michigan that has been on the bubble. There are a bunch of other smaller parts distribution facilities that they wanted to consolidate.
Bloomberg Bureau Chief David Welch in our Detroit Bureau. And Tesla says it has received requests for information and subpoenas from the Justice Department related to potential personal benefit violations, the advertised range of its vehicles, and personnel decisions. Those are the company stories we're following this hour. I'm Steve Rappaport, and this is Bloomberg.
This is Bloomberg Markets with Paul Sweeney and Matt Miller on Bloomberg Radio.
All right, looking at these markets, a little bit of green on the screen here right now. The S&P 500's up about 0.5%. NASDAQ's up about 0.9%. Looking at the yields, after touching 5% earlier today, the 10-year Treasury is now down 7 basis points, trading at 4.84%. So some big moves in the Treasury market. WTI crude oil is off 2.6%. We're now below $86 a barrel on WTI crude oil. So some moves there as well. With our news in New York City, here's Denise Pellegrini.
All right, thank you, Paul. And we're certainly going to start here with the Middle East. Rising tension, more fighting in Gaza, in Lebanon, as Israel continues to prepare for that possible indication of a ground war in Gaza. Violence also surging in the occupied West Bank, including a rise in attacks on Palestinians by Israeli settlers, according to this Palestinian activist.
Burning Palestinian properties, killing Palestinians, injuring Palestinians, calling for the killing of Palestinians.
Yeah, and that's just one indication of the increasing tension in the region. Bloomberg's Anne-Marie Hordern says, as the tension increases, so are diplomatic efforts led by the White House to head off a wider war.
The president took a number of calls over the weekend. Benjamin Netanyahu, he was in contact with, as well as a call with the likes of Trudeau, Macron, Meloni of Italy, Rishi Sunak of the United Kingdom. Really this Western alliance talking about how they could, one, they want to make sure that they are all on the same page, that Israel has the right to defend itself against Hamas, but also they want to make sure that this conflict is contained and that there is not a wider regional conflict that spreads because of this.
That's what they're hoping for, according to Bloomberg's Anne-Marie Hordern. And starting all over again, House Republicans hearing from at least 9 contenders for that speakership. They'll be gathering tonight, holding a secret vote tomorrow. They'll have possibly a more official vote. The word is they have yet to coalesce, Paul, around any candidate. Congress still without a leader. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Denise Pellegrini, and this is Bloomberg. Paul.
All right, Denise, thank you so much. We appreciate that. Matt Miller. Kinda. And Paul Sweeney live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube, so head over to youtube.com and search Bloomberg Radio. Looking at the commodity space, copper briefly tumbled to the lowest in almost 11 months, offering fresh evidence that soaring borrowing costs and slower spending are beginning to bite in all corners of the industrial economy. Prices for the metal, viewed as a bellwether for the global economy, slumped as much as 1.2% to $7,856 a ton on the London Metal Exchange, falling through the bottom of a tight trading range that has held through much of the year. Prices subsequently clawed back losses and were trading little changed as the market close approached. Until recently, mounting worries about weak global manufacturing activity have been partially offset by threats to supply. But prices have been grinding lower in recent months as a rebound in inventories signals that production is now starting to shoot ahead of demand. LME tracked stockpiles of the metal needed both for the energy transition as well as mainstay oil economy needs jumped to the highest since October 2021 last week. The copper market has also moved into a wide contango, a condition where spot prices trade at discounts to futures, typically because consumption is weak. At a macroeconomic level, the pressure on copper has intensified as soaring interest rates and persistent anxiety about Federal Reserve policy spur a rally in the dollar, which makes raw materials more expensive for buyers in other currencies. So keep an eye on that. U.S. Treasury yields rose to multi-year highs last week, and the latest crop of earnings reports show the borrowing costs are wreaking havoc globally. Take a look at those markets right now. A quick check for you. S&P 500 kind of moving higher here, up 0.6%. The NASDAQ up 1.1%. So we've got some nice movement there. The Bloomberg Dollar Index off here, so we had a little bit of a weakness in the dollar. In the yield space, that's kind of where the story was, particularly this morning. Early this morning, around 7, 8 a.m. Wall Street time, the 10-year Treasury hit 5%. Hadn't seen that since 2007, now trading back in the 10 years, 4.84%. Bitcoin, I'm calling that out. That's up 4.5%, 31,200 on Bitcoin. That quote goes out to Tom Keene. WTI crude oil also higher, $85 a barrel. Sound On with Joe Matthew in Washington, D.C. That starts right now.
Now, from our nation's capital. This is Bloomberg Sound On.
Two major stories that we're following here developing before our eyes.
What does it say about Trump's influence on the Republican Party?
What can the Biden administration do on its own to support Israel?
Bloomberg Sound On. Politics, policy, and perspective from DC's top names.
The Republican caucus is at war with itself. Members of Congress would have a press conference every day if somebody would cover that.
There is bipartisan support for Israel.
This is one of the big ones we only see once every decade or 2 decades in the Middle East.
Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
A new week dawns with no Speaker of the House and no ground invasion of Gaza. Welcome to the fastest show in politics as we pick things up on this Monday. The House returning to the Capitol with a speaker's race that starts all over again today with now 9 candidates vying for the gavel. And the U.S., meantime, beefing up its presence in the Middle East on concerns of a potentially widening conflict. We're joined this hour by Terry Haynes of Pangea Policy on next steps in finding a speaker. And with new polling now showing Donald Trump feeling the pitch of RFK's independent run for president, we're going to get analysis from our signature panel on all these stories. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us for the hour. And we start, as always, with a look at Wall Street. Let's get to Monday trading right now in New York with Charlie Pellet.
Thank you very much, Joe Matthew. Stocks solidly in the green once again. It has been a choppy session. The Dow now higher by 99 points, up by about 0.3%. Last update, the Dow had been lower. We've got the S&P up by about 30 points now, higher by 0.7%. The NASDAQ Composite Index up 153, higher now by 1.2%. The 2-year yielding 5.07%, with the 10-year right now at 4.83%. After sliding almost 1% in the first 15 minutes of trading, the S&P rose and is once again above the 4,200 mark. Spot gold lower by $7.50 the ounce to $19.73, a drop right now of 0.4%. And we have got West Texas Intermediate crude slumping 2.5%, 85.85 for a barrel of WTI. Brent, the global benchmark, at 90.10, lower now by 2.2%. Major deal in the energy industry to wake up to on a Monday. Chevron agreeing to buy Hess Corp for $53 billion, a deal aimed at boosting production growth as the U.S. oil industry bets on an enduring future for fossil fuels. This is an all-stock transaction. Chevron, though, lower by 3.2%. Hess Corp down by 0.9%. Again, recapping, stocks are higher. S&P up 28, a gain right now of 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hi, Charlie. Great to have you back. Thank you and welcome to the Monday edition of Bloomberg Sound On. I'm Joe Matthew in Washington, where it begins anew. Members of the House trickling back into town here as they are set to start the process all over again. Of course, the process of finding a new speaker. Republicans holding a closed-door candidates forum once again tonight. Starts 6:30 p.m. Washington time if you're playing along on your home game. And we have the largest number of candidates we have seen yet now. 9 members of the House running for Speaker. 9. So where's the count when you need him?
1, 2, 3, 4, 5, 6, 7, 8, 9. 1, 2, 3, 4, 5, 6, 7, 8, 9.
Yes, 9. And most Americans have never heard of them. Congressman Tom Emmer, the majority whip, by the nature of his job, may be the best known. But none seem to have a path to 217. And the man who last held the job put it this way yesterday on Meet the Press.
This is not a time to play games. This is embarrassing for the Republican Party. It's embarrassing for the nation.
Embarrassing, says Kevin McCarthy. Michael McCall, who of course chairs the House Foreign Affairs Committee, was with us last week here on Bloomberg, echoing the sentiment on ABC This Week.
I have to say, it's my 10th term in Congress. Yeah. This is probably one of the most embarrassing things I've seen, because if we don't have a Speaker of the House, we can't govern. And every day goes by, we're essentially shut down as a government. We have very important issues right now, war and peace, and we cannot deal with an aid package or my resolution condemning Hamas and supporting Israel. We can't.
You can't even pass a resolution condemning Hamas.
A resolution, never mind a bill. Which brings us to Billy House, Bloomberg Congress reporter. He's back with us now. with big question marks at the start of this week. Billy, it's good to see you. You're with us from the House of Representatives, where this is all about to tip off here. We've got 9 candidates. How's it going to work here when voting begins? They all kind of make their stump speech tonight, and then each round will bring some level of progress tomorrow. Is that how you see it?
Exactly. Tonight around 6:30, they gather behind closed doors for what seems like it'll be a little bit like Hollywood Squares. 9 candidates, each giving brief opening remarks, and then 1.5 hour question and answer period, followed by closing remarks. Then tomorrow morning, they begin balloting behind closed doors. And of course, there's no winner until somebody gets a majority of the 221-member conference. So that's 111 votes. And that could take several rounds. Each round, the lowest vote getter drops out. And so it could go for a long time.
So this is kind of like a ranked choice thing, I guess. Maybe that's not what we call it. But to Billy's point, each vote, the person who got the least rolls off the back. So the idea here is that by the end of the day, we've coalesced around someone. And Tom Emmer keeps getting the talk here. He's the majority whip. Billy, by the nature of his job, you'd think he might have the institutional wherewithal to get this done. But they said the same thing about Steve Scalise. How does it play for Tom Emmer?
Right, exactly. He's probably at the top of the list. There's others that are very competitive, maybe Byron Donalds, maybe Kevin Hern, who headed an informal caucus of conservatives. But the problem with Scalise and Jordan both were that they got the 111. They just couldn't get the 217 on the House floor. And Emmer has had a longstanding kind of tense relationship with former President Trump. So the big question would be, if he landed on the floor, would Trump direct his supporters to block Emmer, or are the negotiations said to be going on now?
Unbelievable. So now this Trump thing is all about the fact that Emmer voted to certify the election, right? He's publicly been a Trump supporter at every turn otherwise.
Pretty much so, although he's kind of at times suggested, when he was head of the political arm for the Republicans, that members should sometimes worry about their districts more than pacifying Trump. That's kind of set off some suggestions. There's tension. But right, he and Austin Scott are the only 2 of the 9 who did not go along with certifying both Arizona and Pennsylvania in the 2020 election.
And that's all it takes in this, I guess, modern Republican Party here. So you're in for a long one, I guess, Billy. 9 speeches. Do they get a clock on these at the candidates forum? Or do they each get 5 or 10 minutes, or how does it work?
My understanding, they each open up with about a 2-minute statement. Then they have the group question and answer, then a closing statement of about a minute.
Excellent. Great to have you back, Billy. If you're curious, by the way, to see the most authentic shot on Capitol Hill, join us on YouTube. Search Bloomberg Global News. You can watch this program now, and you can see Billy House in the spot where it all happens in the House gallery. It's great to see you, Billy, the most authentic Congress reporter in the appropriate setting. As we add Terry Haynes to the mix, I thought about you all weekend. Terry Haynes, Pangea Policy founder, because we've had such great conversations around all this. And Terry is actually one of the only people in the Capitol who understands the way this works with a speaker pro tem. He helped to write the language here after 9/11 as a senior House staffer, and has a different view than some folks do about all of this. And we'll probably get to that, Terry, because we still have 2 resolutions ready to go that would make Patrick McHenry an empowered speaker. But we're going to go through the motions here all over again. Hold the chain of command conversation, because we have 9 people who think they should hold that gavel, yet none of them seem to have a path to 217. Is this a total waste of time, exercise in futility this week, or does someone emerge as a potential speaker?
I think it's less likely rather than more likely that we get a speaker this week. But because I think, frankly, people aren't exhausted enough. What you had in the first 2 rounds essentially were very known quantities that had a great deal of support from what I'll call the purist wing of the House Republican Conference. We don't have that this time. What we have are a bunch of folks that can put themselves up as compromise candidates, including Mr. Emmer, who's by far the most well-known of them, as you said, and as Billy said. But, the essential problem's the same, which is, there's no obvious path to 217, number one. Number two, it's very unlikely that the vast majority of these people, other than Mr. Emmer, have the ability, have the experience, I should say, with everybody in the House to feel kind of trusted enough that there's actually a track record there that that would make folks on the centrist wing and the purist wing feel that they would have a decent speaker. So I think we're going to go through this exercise, and what we're going to have is, after 2 rounds where the more conservative, well-known candidates don't do well, you're going to have a group of folks that frankly aren't senior enough or trusted enough, and then we'll get down to brass tacks and figure out what who that is. Who the next speaker is for real. They may jump over that and end up with Emmer. That's entirely possible, but it doesn't feel like that right now.
Yeah, fewer than 7 of the 9 have been in Congress fewer than 10 years, which I find interesting. You write in your note to clients, Terry, there's no forcing event requiring House Republicans to act immediately, and you point to November 17th, which of course is the date of a government shutdown. There are many in the Republican conference who are not fazed by that. And I wonder if it's a potential invasion of Gaza that actually lights the fire here and creates new urgency under this process when resources will be badly needed in Israel, and that supplemental budget request the president's making has to be dealt with.
Well, I wouldn't say it's let me answer it this way. I wouldn't say it's the Gaza invasion. I would say it's the prospect of expansion into a regional war. If you get some sort of serious pushback through the Golan Heights or something, and it becomes clear that Israel's going to be in a 2-front war here, then I think things get booted along pretty well. Firstly, secondly, I think the president's request alone isn't enough to do it. As of yesterday, anyway, I haven't seen anything different. The formal request in its entirety still hasn't gone to the Senate or the Congress. It's gone. Part of it's gone to the Senate, the foreign aid part, but the border stuff has not. And so I think that the Senate is, by the way, intends to try to start dealing with the request not this week but next week. So, and the Senate, I think, is far more likely to shape the final version of the aid requests for Israel and Ukraine than the House is. So, the House, I think, has frankly got another couple of weeks where they can be on the sidelines and things don't matter very much from a policy perspective, frankly.
Terry, Punchbowl is reporting that Donald Trump and Tom Emmer spoke on Saturday. We know that Donald Trump's apparently not a fan because Emmer voted to certify the election. You can have a whole separate conversation about that. But to what extent, after the implosion we saw with the Jordan endorsement, to what extent does Donald Trump matter here?
I think Trump matters in the sense that that no matter who the nominee is, that he can't go strong negative, and that's probably what on the nominee, and that's probably what Emmer is trying to foreclose. I haven't said Billy, you and Billy talked about this and put it very well, but I haven't seen anything that indicate sort of hard evidence to indicate that that Emmer is sort of hard over negative on Trump. And and a lot of people have been probing from a lot of different points of view. So Trump and Emmer probably need to be generally good with each other to go forward. You don't want the person who's the former president and the person leading in the polls for the next nomination to be negative on you. But at the same time, Emmer doesn't need to be captured by Trump either. So there's got to be a kind of an uneasy truce that goes forward here.
Well, as we try to figure out points of influence then, Terry, Kevin McCarthy endorsed Tom Emmer. He talked about it yesterday on Meet the Press. Some folks thought that was like getting the cover of the front of the Wheaties box here. Does that help or hurt Tom Emmer to have Kevin McCarthy's support?
I think that probably helps, frankly. You have, again, everybody knows the math, but you've got 95% of the conference who would have been fine with having McCarthy stay in the seat anyway. So to have McCarthy in your corner is important. Number one. Number two, by implication, McCarthy and others can also weigh in with Trump to just say, hey, look, back off the guy. He's all right, in so many words. And I think that's very likely happening.
So what do you think of this process? They go back into 1100 Longworth tonight. I believe that's the Ways and Means Committee room. Close the doors at 6:30. Everybody gets a couple of minutes. We got 9 to go through here, Terry, and the voting will leave someone off the island in each round. What do you make of the process here based on what we've seen not work already?
I think the process allows aggregation. Let me put it that way. To the extent that any of the other 8 have support, no matter how small, they can help Emmer actually roll up a pretty large vote if they then say, okay, if it's not me, it's going to be Emmer, let's say. And Emmer is, I think, working on that assumption as well, that one way he can present himself very strongly is to make sure that the other candidates are available to endorse him. And I think the vast majority of them will either explicitly or implicitly endorse him. So he ought to be in a pretty good position going in. So we are back to, unlike the last 2 rounds where we're back, where the centrists essentially exercised some power to make sure that the speaker wasn't going to end up being too conservative and put the majority and them personally in some peril. I think we're in a position here where Emmer's going to try to be a little bit more of a tabula rasa and appeal across the board, lightly, but across the board. It's the best gambit he's got, so he might as well shoot it.
Well, as you make clear in your note to clients, and as you just said, you don't think we're going to have this solved this week. And I only have 30 seconds left here. Terry, does that mean Patrick McHenry drops a CR on the floor to avoid a shutdown if it comes to it?
If it comes to it, yeah, but we've still got 3 or 4 weeks left to go. And, as I've said before and will say again, when there is an actual crisis, whether it's a CR or an invasion of Israel or whatever it is, you're going to see this whole we can't act because there's no speaker thing get dropped like a hot potato.
You heard it again from Terry Haynes. He helped to write the rules, and we appreciate that. Look at McCall. He drops that gavel every time. Join us on YouTube so you can see Patrick McHenry and Terry Haynes. I'm Joe Matthew. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:21 on Wall Street. We do check markets all day long at Bloomberg. The Dow turning negative once again. It is down, little change, down by 1 point. The S&P 500 index up 18, higher by 0.4%. After sliding almost 1% in the first 15 minutes of trading this morning, the S&P 500 index is now higher and back above the 4,200 mark at 4242. Right now, the S&P is up 18 points. That is a gain of 0.4%. The Nasdaq Composite Index up 117 points, up by about 0.9%. 10-year yield 4.83% with a 2-year that's now yielding 5.07%. Gold down $5.50 the ounce to $19.75, a decline there of 0.3%. West Texas Intermediate crude, big move there, down 2.7%. WTI down $2.40 a barrel, right now at $85.67 a barrel. Chevron is buying Hess Corp for $53 billion. It is an all-stock transaction. It is also a deal that is aimed at boosting production growth as the American oil industry bets on an enduring future for fossil fuels. Shares of Chevron, they are down 3.2%, and shares of Hess Corp, right now, they are down by 0.9%. So again, recapping, we're looking at a mixed Monday here. S&P up 17, up 0.4%. Dow Industrials, little change, down 8, while Nasdaq is rallying by 0.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
Should the Republican-led House start taking cues, maybe some direction from what happened in 1855? We talked about this back in January when Kevin McCarthy went 15 rounds. Remember, they said, how long could this go on for? Try 2 months. That's what happened in 1855. Libby Cantrell at PIMCO is writing about it in her note to clients today. The deeply divided House took more than 2 months after 21 candidates vied for the speakership in, get this, 133 rounds. Might take us a minute to break that record. Ultimately, Representative Banks of Massachusetts beat Representative Aiken of South Carolina 103-100. That was 6 years before the Civil War. And as Libby writes, Congress, as the nation, was deeply divided over slavery, immigration, more broadly, the future of the republic. Is that starting to sound familiar? Let's assemble our panel. Rick Davis and Jeannie Shanzano join. Bloomberg Politics contributors with the view from both sides of the aisle. It's great to see you both here. We got through another weekend, but we still have no speaker. And Rick, I'll start with you. 9 up here for the candidates forum tonight. Will anything happen this week that didn't happen last week?
Yeah, I think my bet would be you'd see kind of a reoccurrence, the Groundhog Day effect, where somebody will win, a plurality, of the Republican caucus, get the nomination, probably Emmer first round up. He'll go down the floor and he'll get nowhere near 217 votes. So,
nowhere near.
Depends on how long he wants to stay in. So he'll get as many votes as he wants until he realizes he can't get to 217, and we'll do it all over again. I think the point Terry made earlier was that if you think we're going to have a speaker this week, you're probably much more optimistic than anybody else on Capitol Hill.
So it's shades of 1855, Jeannie? Do we go 133 rounds? I mean, I guess at a certain point here, you just wonder how long we could go without a speaker. I know we've got a government shutdown set for November 17th, but hey, we could roll right through that too.
Yeah, Joe, I like how you're saying, on the bright side, we're not just, on the cusp of the Civil War. That's pretty much the optimistic view of this. And, the reality is that unless they are prepared to lock the doors when they go into that caucus this week and keep them shut in there with no breaks until they get to 217 and promise not to violate their pledge when they come out to the floor, we aren't going to see a speaker this week. And of course, they're not going to do that. Nobody is close to getting 217 at this point, as far as we can tell. So we are right back where we started from, 20 days ago now. And the reality is that they are going to have to either agree to put party above self, or they are going to have to go with a temporary, speaker, potentially a McHenry, a speaker pro tem, more powers, because of course we are 8 legislative days from November 17th when our government shuts down, amongst many other things that are looming very closely ahead.
So we've still got our eyes on Patrick McHenry then, Rick, and I wonder what you think about Terry's view on that. We know how Terry feels. He thinks that Patrick McHenry could just start acting like the speaker today, bring a bill to the floor. The language allows for it. Is that how this ends?
It could. I mean, I think Terry's point about you need an action forcing event like the CR winding out or some other important event to make things happen. And by the way, that's always the case in the House of Representatives. They never get their work done early.
True enough.
And so I think that's one prerequisite. Two, it really is kind of like a shame that Patrick McHenry is where he is, because he knows that if he starts acting like speaker and starts taking on the role, that he's doomed within his own caucus, right? He is one of these guys who's actually pretty well liked amongst everybody. He gets a lot done.
Yeah.
He cut these deals with Biden on debt limits and things like that. And he's having the time of his life in his career. And now he's in a job where everyone's going to hate him no matter what he does. And so I think he's just shocked that he's found himself in this position. You see his interviews, and he's forlorn as to what he's supposed to do. And by the way, nobody's giving him advice, right? The former Speaker McCarthy says, no, we want Emmer now. Oh, but we wanted Jordan then. I mean, like, they want their own people. No one's saying, hey, why don't you do this? And the Democrats are just waiting to laugh about it. So I think he's stuck in a really intolerable position. He's basically going to have to decide that, it's more important to act like a speaker than to have a comfy relationship with his own caucus.
Well, we may find out how much of a grown-up he really is if that's the case. We heard from Michael McCall over the weekend, the chairman of the House Foreign Affairs. He was talking on ABC this week about the state of affairs around the world, creating its own level of urgency. Unclear if it's enough. To your point, though, Rick, there could be some event that spawns action here on Capitol Hill. McCall thinks it's already happening.
I want a speaker in the chair so we can move forward and get my issues, my Committee of War and Peace. It's too dangerous right now. The world's on fire, and this is so dangerous what we're doing. And most importantly, it's embarrassing because it empowers and emboldens our adversaries like Chairman Xi, who says, democracy doesn't work.
The world is on fire right now. Rick, what's the approach? If you're a candidate standing before the Republican conference tonight, what do you have to say about Israel and Ukraine? Never mind Taiwan and border security, as the president wants to put all these together into one bill. He had Mitch McConnell out over the weekend supporting this. What do you have to say to get support in the House on this matter?
Yeah, look, I think generally speaking, the House is willing to receive these kinds of offers. We heard from Terry that there's not a lot of clarity around the border situation, but that's like protecting the United States' democracy, right? I mean, like, we talk about putting money into Taiwan, putting money into Ukraine, putting money into Israel to protect their democracies. The border money is to protect our democracy. So they have a lot of, sort of connective tissue that exists there. And I think that's all these guys have to do is say, look, I don't really care which one of these that you care most about. You ought to care about our country most and our position in the world. And we're under assault by all these other pretenders. And we've got to do something about it. And this is the time. The reality is, it doesn't matter how many of them dissent. If you had an open vote, you'd have 300 people vote for this, combined bill in the House of Representatives. It's just the crazy eights and others who don't want to see government act on anything who are trying to hold up the process.
You've got $60 billion in there for Ukraine, though, Jeannie. Would the message tonight not be break it up? Let's get standalone votes on Israel, Ukraine, Taiwan, and yes, by God, border security. Wouldn't that be a standing O in the room? Or is that just Matt Gaetz clapping?
Yeah, you'd have some, you'd probably have those 8 clapping. The reality is that they do not have the votes to pass this. And so they are going to have to struggle to move this forward. And, you know, it's fascinating because you'd think on the one hand, what happened last week, both sides tired each other out by voting down their favored candidates. And yet that doesn't seem to happen. Terry just said they're not exhausted. I don't know what it's going to take to get these folks exhausted, but we're all exhausted watching this. And so they need to look around the world and see, to McCall's point, what is going on. And what struck me this weekend was over and over, for the first time, we heard the word from Republicans that they are embarrassed. We've been using that word, but they haven't. And so maybe that's a sign of exhaustion coming. But if it's not, we are in for more of this until they decide. And in the meantime, you've got Ukraine, you've got Israel, you've got the border, all of these issues, not to mention Taiwan. And we've got a government that is shutting down in, you know, just about 8 working days.
Incredible. It's incredible to think about. Patrick McHenry, he's just going to be swinging that gavel harder and harder and harder until this is resolved. Jeannie Shanzano and Rick Davis, great to have you both with us here. As we turn to the campaign trail coming up, Israel is having an impact in the Republican primary, and we've got new numbers out today that for the first time codify what Rick and Jeannie were talking about. RFK Jr. splitting off from the Democrats to run an independent campaign appears to be having an impact on Donald Trump. We'll have all that coming up next after we update world and national news. Denise Pellegrini has that in the newsroom in New York. Hi, Denise.
Hey there, Joe. Thank you. We've got the auto strike expanding. United Auto Workers union members at Stellantis money-making pickup truck plant in Sterling, Michigan, joining the striking workers and walking off the job. Possible breaking news on the hostage situation with Hamas. Khan TV in Israel is reporting a number of hostages held in Gaza to be released soon. I just spoke with Bloomberg's Ethan Bronner. He's a bureau chief there in Israel for us, and he says there aren't a lot of details on this, but it does look like it actually could happen. He has a sense that a number of hostages may be about to be released. More fighting in the Middle East. Israel saying today it thwarted attempts to fire anti-tank missiles at it from Lebanon. Bloomberg opinion editor Bobby Ghosh says Israel is between a rock and a hard place right now when it comes to Gaza because of humanitarian concerns, and also worries the war could widen with Hezbollah and Iranian involvement.
There's a lot of pressure on the Israelis to hold off, to restrain themselves from the United States primarily, but from the wider world, I would say, cautioning against the ground invasion.
And Bloomberg opinion editor Bobby Ghosh also says that hostage situation we've been talking about is making it possible that the ground invasion could be even more complicated, of course. And we're also getting word that Turkey's Erdogan is backing Sweden's NATO membership. That's after a long delay. President of Turkey, Erdogan, asking his country's parliament to ratify Sweden's application to join NATO. That's after almost a year and a half of waiting. Global news 24 hours a day, and whenever you want it with Bloomberg News Now. I'm Denise Pellegrini, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ once again in the green. Choppy session for the Dow, though, has been swinging between gains and losses. We're looking at an 8-point advance right now, up by less than 0.1% on the Dow. The S&P at 42.44, up 20 points. That's a gain of 0.5%, while the NASDAQ Composite Index is surging 121 points, up by about 0.9%. 10-year yield 4.83% with a 2-year right now, 5.07%. Spot gold down $5 the ounce to $19.76, a drop there of 0.3%. And West Texas Intermediate crude down 2.6%, $85.76 a barrel on WTI. Bottom line here, stock market halting a 4-day slide despite a renewed bout of Treasury volatility. The Commerce Department reports on third quarter economic growth this week. Economists are forecasting a solid advance in Thursday's GDP data, even with talk of an impending recession. And with more, here's Bloomberg's Vinny Del Giudice.
If the forecasters are on the money, we could see a 4% GDP growth rate, give or take, twice the prior quarter as household spending bounced back. Another positive development, potentially a gauge of inflation tied to the GDP report and tracked by the Federal Reserve, could show some moderation. Vinny Del Giudice, Bloomberg Radio.
It's a $53 billion deal. Chevron buying Hess Corp, a transaction aimed at boosting production growth as the American oil industry bets on an enduring future for fossil fuels. Chevron down 3.2%, Hess down by 0.9%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
This is Bloomberg Sound On with Joe Matthew on Bloomberg Radio.
The conflict in Israel is finally having an impact on the Republican campaign trail as candidates look for any opportunity to find daylight between them in a race that is still deadlocked here. And we're going to look at new numbers coming up to show just how well Donald Trump is doing with regard to the rest of the field, though RFK Jr. remains a bit of a question mark. Let's reassemble our panel. Jeannie Shanzano and Rick Davis are with us, Bloomberg Politics contributors. As we see a new ad drop, I don't know if you guys saw this coming from the Never Back Down PAC. This is the Ron DeSantis PAC. He's trying to go after Nikki Haley, remembering that she was the UN ambassador on the matter of Israel and what he apparently sees as her history of supporting Palestinian causes. You can hear the ad. It's called Nikki Flip Flops.
Governor Haley, do you believe that it advances U.S. interests to provide food, jobs, homes to the people of the West Bank and Gaza?
Yes, I think that we need to do whatever we can to protect the region anytime that we can help mankind, regardless of where they are and what country they're in.
It's essentially a string of comments from her on video in that first instance testifying as UN ambassador on Capitol Hill. Rick, what do you make of this among candidates who really probably don't have much difference when it comes to the issue of Israel? Will this get to be a louder element on the campaign trail?
I don't think so. I think this is more representative of kind of a, flagging campaign by Ron DeSantis to try and figure out who's next to him that he can try to run down in order to pick up some extra oxygen votes in Iowa. He's having a hard time moving now past his sort of 15% that we see in the polls a lot in Iowa, even less in New Hampshire. I think by and large, Nikki Haley has overtaken him in New Hampshire and of course is considered one of the two favorite sons for South Carolina. So he's in a tough spot. He's not running against Donald Trump anymore. He's trying to be now, preserve his second place, which I think is pretty much over. So he's got a narrow focus here. I doubt if much is going to get picked up on this. Remember, she's saying all these things is she represented the Trump administration. An attack on Nikki Haley is an attack on Donald Trump. Most of these guys aren't got stomach for that. So she's got some protection in that regard.
Well, we've got new numbers out from USA Today, Suffolk University. Jeannie, Trump 58, DeSantis 12. There's your 46% lead. Haley 11. So DeSantis and Haley essentially tied here. And it's the hypothetical that's getting all the talk. We've talked about the impact or not that RFK Jr. could have on this race, and it seems to be bearing out here with the headline in USA Today. It's a tie. With a year to go, Joe Biden, Donald Trump each command 37% of the vote in a hypothetical matchup as independent Robert F. Kennedy Jr. Jeannie cost Donald Trump what would have been his narrow lead. So if you were wondering the impact, it plays out in this poll. How much of a problem for Trump is RFK Jr.?
You know, I think he is an enormous problem. And the fact is, and you know, the Clinton folks can tell you this from their go at the presidential election in 2016, when the elections are going to be as tight as we expect this one will be in 2024, an independent candidate like an RFK Jr., or in the case of 2016 for Hillary Clinton and Jill Stein, in one or two of these tight states can be the difference of a few thousand votes, which costs you the Electoral College. So I think critically important for these candidates is to watch the state-by-state polls on this. And that's where you can see this costing enough votes to move the Electoral College. And so I think this is an enormous concern for the Trump folks. What's fascinating is when RFK entered this race, it was the Biden folks who were terribly concerned. By the way, think they still need to be concerned because, again, a few thousand votes can cost him a state like Pennsylvania or Arizona or Minnesota or Michigan. But now it's the Trump folks feeling the same heat, and that has got to be a concern.
You predicted this, Rick Davis, when RFK Jr. left the Democratic field to run as an independent. Is there going to be a race now between RFK and Trump to seize on the vaccine denier vote?
Yeah, no, it's a tricky calculus for Trump. Trump tends to run against everybody all the time, so this is kind of not unwelcome to him. I would say it comes at a bad time for Trump because he does seem to be making up some headway with independent voters. And now all of a sudden, you know, they've got an independent to vote for. And so they may certainly the more conservative ones may gravitate that way. I think a lot of this, though, just has to be reminded constantly. We're in a deadlock in the country, right? Jeannie mentioned the 2016 election, almost dead even. 2020 election, almost dead even. This one is going to be almost dead even, no matter who the nominees of the two parties are. So I think that one of the things that we're going to be talking about a lot is the effect of these third-party candidates. I would say Cornel West has as much potential impact in a state that's key to Joe Biden, like Michigan, than JFK would have against Donald Trump, even though it could manifest itself more nationally. And then we're all holding our breath to see what happens with those no-label guys. Because they enter this race and you have more capacity for, you know, third-party candidates than you even have today.
That's right. Jeannie, talk to me about Cornel West. He's got 4% in this poll. Rick was very eloquent there. 4% is enough to tip a race in a state like Michigan or Georgia. How concerned should Joe Biden be about this?
Very concerned. It is the same argument, and the real concern with Cornel West, it is a concern that he is going to pull not just from Democrats overall, which he could in tight states, but also young people who are very attracted to somebody like Cornel West, to people on the progressive left who are the activists in the party, the people who get out to vote, and young people. And anytime you're talking about Democrats, there's two constituencies you cannot afford to lose: young people and African Americans. So those are the two you always want to watch in these polls. And Joe Biden has a huge problem in both of those areas, particularly young people. And so this is something they have been trying to combat, but how they do that is very, very challenging given the negatives Biden has, which is one he can't surmount, which is his age.
Unreal. I hope you're listening to Rick and Jeannie. If all this stuff happens, if everybody jumps in, we get a no labels candidate, it is going to be a circus next year. But hold on. Someone just dropped out of the Republican presidential field. We're going to have that coming up next. Final thoughts from our panel. This is
your company news headlines on Bloomberg Radio.
From Bloomberg.